PPI and CPI as global debt with sub-zero yields tops $16 trillion. Bridgewater co-CIO Bob Prince tells Bloomberg a pickup in inflation would be mind-blowing, and that, he means, in a very bad way for holders of that debt. Now, let's take a look at the GRR screen right now to see how equity indexes are opening up. We are looking at probably a risk on Monday. GMM. This is the global macro movers screen, GMM go on your Bloomberg. And the left-hand column are the equity indexes. As they go live, they pop up in this column. You can see the IBEX in Madrid is gaining 0.7%. The FTSE 100 is up 0.5% right now. The DAX is up 0.4%. The CAC is up about 1/3%. So we are looking at European markets opening up higher on this Monday morning after President Trump took executive action to combat the indecision in the House in terms of U.S. stimulus negotiations. Maybe to combat indecision. Maybe this was all part of the plan. On the menu, expanded unemployment benefits from President Trump, as well as a temporary payroll tax deferral and eviction protection, as well as student loan relief. And after its months-long rally against the dollar, the euro seems to have leveled out just below $1.18. European countries are pushing ahead with their plans to return to normalcy as well. Joining us now is Eimear Daly. She is EMEA FX strategist at Macquarie. And Eimear, let me first ask you about the euro strength here and what you see in terms of it moving forward. Does President Trump's executive action or the possibility of more U.S. stimulus mean we're going to hold steady at 118?
Yeah, I think, it's very much the initial reaction has been very risk positive, and obviously the weaker dollar. We're not one of those banks that are kind of piling into, dollar bearish bandwagon. If you look at the dollar, it's now kind of retraced all its coronavirus gains. So I think that narrative, the continuing risk on, should be to the detriment of the dollar, who's really lost a bit of momentum. If you look at positioning, short dollar positioning is historically stretched and looks really extended. And the other side of that,
good morning, everybody. Welcome to SG Live Trading channel. You can follow us for free, live, copy our trades and make some profit. We trade live our own funds in front of you and our clients, so you can see how profit being made. Let me tell you what we show you. We show you only one screen of our trade station. You see 5 pairs that we're going to show you during this day. You're going to see our trades on Japanese yen, on British pound against dollar, Canadian dollar, euro, and Bitcoin. We trade live, as I said, our funds. 1 pip equal 100 pounds, except Bitcoin, where 1 pip equal 10 pounds. Every week we run webinar how we trade. So if you want to register, please go to company.co.uk/webinar. You can practice our strategy, and to see our past trading sessions, you need to go to SG Trader channel and click playlist. You will see 1,000 saved live trading sessions and also the profit we made. We keep free for you and our clients who purchase our strategy, so they can practice our strategy, and also through our live trading sessions. Okay, let's see what this day will bring us. Welcome again to our live trading channel.
For weakness, I think also very true, of course, is the big Brexit, which is kind of looming over sterling. We probably think you need that kind of time pressure to see it played out. Remember, we've lived with Brexit risk in the UK for 4 years. So I think, coming up to, we've got a November 26th penultimate meeting of the European Commission. And that's really kind of when you need to have an agreement, just so logistically you can get it signed off by both sides. So we think, coming into year end, we could really see a lot more pressure coming on sterling.
You are one of the top 5 forecasters for G10 FX, but you're also an economist. I think you recently got your master's at LSE. What do you think about the European safety net measures? Is that the key to the European economy making a half-decent recovery compared to what we see going on in the U.S.?
I think a lot has been made kind of even symbolically about this EU recovery fund that, it takes out, decurrency risk, or that, euro breakup risk. But I think a lot is still very idiosyncratic policies coming from the individual governments. I think we do still have severe risk of downgrades in the Eurozone, particularly Italy, where it is very close to junk status. We certainly don't think it is taking away that euro breakup risk. If you look at debt to GDP ratios, they are rising very menacingly across the Eurozone. So we don't see it as kind of the game changer policy or this kind of moment of European integration that others probably are.
All right, Emer, we're going to keep you with us for just a little bit longer here. Emer Daly is an EMEA FX strategist at Macquarie. We want to talk a little bit more about what's going on in the UK. The dollar weakness may be coming to an end against other currencies as well. We'll get her top calls across the board. This is Bloomberg. Welcome back to Bloomberg Markets. This is the European Open right now. 10 minutes into the session, we're looking at gains not quite as strong as the futures gains that we saw, but the FTSE is up 0.5% right now in London. The CAC is up almost as much. The DAX just treading water here, up about 0.1%. Let's get the Bloomberg Business Flash. For that, we go to Laura Wright in London. Laura?
Thanks, Matt. Saudi Aramco is pressing ahead with plans to pay $75 billion in dividends this year. That's despite slumping profit and a surge in debt. Net income for the quarter fell 73% from a year earlier. But the worst may be over. The oil giant's chief executive, Amin Nasser, says it's already seeing a partial recovery in the energy market. 1 in 3 UK employers plans to cut jobs this quarter. That's according to a survey by the CIPD and Adecco Group. It highlights the growing risk of a labour market crisis as government support is withdrawn. Last week, the Bank of England warned unemployment will rise to about 7.5% by the end of the year. Equinor has appointed Anders Opedal as its new CEO. Current boss Eldar Satra is retiring after running the oil major for the last 6 years. Opedal is currently Executive Vice President of Technology, Projects and Drilling. He joined Equinor as an engineer back in 1997. That's your Bloomberg Business Flash, Matt.
Laura, thanks very much. Laura Wright there in London with your Business Flash. Now to the UK, and in the second quarter, GDP likely plunged to levels not seen since 2003. That's as the lockdown forced much of the economy to shut, obviously. The median forecast is for a 20% fall, a sharper slump than many European peers, and the recovery is made harder by local spikes in cases, which are likely to hit confidence. That GDP number is due on Wednesday at 7 a.m. UK time. Emer Daly is still with us, EMEA FX strategist at Macquarie. As I said, she's a top 5 in the top 5 as ranked by Bloomberg in terms of G10 FX forecasters. Emer, how do you expect the pound to react over the next week? I mean, how important is this GDP number? It's clearly going to be very bad. What do you see?
Kind of the interesting thing about the pound is almost being kind of sidelined. So everything in the FX market is very much dominated by the dollar story. So a top-down kind of global macro view. We've actually seen the pound kind of more traded as a risk proxy, as very high beta FX. So you see quite limited impact from domestic data. However, the risks certainly are there in terms of the UK economy and how poorly it is doing. The UK is obviously very much concentrated on the services sector. I think everyone will be focusing on that index of services number, how weak that comes out. And it does look like it's the most exposed kind of industrial sector to coronavirus and obviously lockdown measures.
What is longer term, of course, we're looking at a Brexit decision, possible agreement, maybe not, that doesn't seem to be the focus of the markets right now. I mean, how important, when is this going to become very important?
Yeah, I really think you need time pressure. We saw in June that you had this kind of tentative deadline where you had to come up with, a services agreement and a number of other agreements on fishing rights. And that just completely passed. And obviously the UK never asked for an extension of the transition period. I think you need that time pressure to really focus minds. November 26th is, I think it's the penultimate European Commission meeting, and that is a deadline where you need an agreement to be agreed by both sides in order for it to, just on timing, to be passed in time for the end of December. So we think around that time period, you'll really see Brexit risk coming back into focus. We've seen a significant paring back of sterling short positions. So, for example, they're nowhere near how short the market was for sterling in October of last year, when we were obviously worried about that October deadline for Brexit. We think the market will position short sterling going into that deadline. And obviously it also coincides with the end of the UK furlough scheme. So we're seeing that as a kind of particular point of weakness for sterling.
You've already told us you see dollar weakness coming to an end, easing at least. And we were talking about, of course, the euro dollar or cable. But what about the Asian currencies. What about, for example, the renminbi? How do you see the yuan playing?
Yeah, I guess the interesting thing about the yuan is, how weak it's been, considering, we've had a V-shaped recovery in China. If you look at the yield differential, it's so much more lucrative to be holding Chinese assets. Just the overwhelming theme is U.S.-China rhetoric and just that escalation into the November presidential election. So we are definitely forecasting a weaker CNY heading into that date. We're looking at back at 7.15 into the end of September. And it's really on just that U.S.-China race. We've obviously seen a lot of that kind of coming to fruition with different measures. We're looking also at kind of temporary license agreements, if they'll be renewed, and any kind of the legislation that is in the U.S. Congress at the moment over sanctioning China, over coronavirus itself. So I think you're only really going to see that rhetoric escalate going into that date.
All right, Eimear, thanks very much. Great to get some of your thoughts today. Never enough time, unfortunately, but hope we can get you back again soon. Eimear Daly, EMEA FX strategist at Macquarie. Thanks for joining. Coming up, Saudi Aramco, I should say, the state-owned oil company, pressing ahead with dividend plans despite sliding profits and rising debt. We'll give you all the details on this big oil story, the biggest. This is Bloomberg. Welcome back to Bloomberg Markets. This is the European Open. We are 19 minutes into the trading day right now, still looking at gains, and in fact, they are improving. So we're starting to see a little bit of a pickup in trade. The FTSE gaining 0.9%. The DAX had been unchanged. It is now up about 1/3%, and the CAC 40 is up about 2 or 0.75% right now. Italy and the UK reaffirmed plans to reopen schools in September, even as daily coronavirus cases rose in both countries above their 7-day average. Meanwhile, educators in the U.S. are preparing to welcome students back to class for the first time in months. Johns Hopkins School of Public Health professor Andrew Picos spoke to Bloomberg about whether schools are ready.
It's a very difficult time right now because the true risk of going back to schools for kids is still a little bit unclear. One thing that's certain, though, is that it's very difficult to send kids back to school if you've got a high level of transmission of the virus in the community, because essentially a school is exactly the type of environment you want to avoid if there's large amounts of transmission in the community. Now, if your community has well-controlled infections and you have good testing and contact tracing in place, then there are perhaps opportunities to open up more aspects of in-person learning. So I think one of the confusing things becomes the fact that it really is dictated by local conditions. And so there will be some differences across the state, across the country, in terms of how schools are being reopened. But everybody has to maintain these basic principles of understanding that they have to minimize the risk of transmission in this population.
But Andrew, from what you're hearing, are the schools that have decided to reopen and taking appropriate social distancing measures?
That is the most difficult thing to really put into place. And again, there's a spectrum of responses or plans that are being put in place with different schools. Certainly some schools are trying to mix online with in-person learning by limiting the number of students that are coming in, limiting the number of days students are coming in. Those approaches seem to make sense, again, particularly if the virus is present at low levels. I think it's difficult in any situation to justify going back to what we saw last year in terms of schools and going back to full classrooms and everybody showing up at the same time and on every day. Because, again, those are the scenarios that there's really no place in the country that is controlling the virus well enough to allow those types of activities to resume.
How critical are phase 3 trials that are starting on these vaccine candidates?
Yeah, incredibly important point. So there are a number of phase 3 trials that are starting with vaccine candidates. This week there was also a phase 3 trial that was started with something called monoclonal antibody therapy. That's where you specifically just give people antibodies that neutralize the virus with the hope that they will then improve in terms of their disease progression. These are incredibly important studies because these will not only give us a better idea of any kind of adverse or safety issues that are coming along with the vaccine candidates, but they're also going to look for vaccine efficacy, meaning they're going to keep track of the people that have been vaccinated and see how many of them actually get COVID-19 compared to a control group. And so that's going to be the most critical answer, because up until now, we've been showing that these vaccines induce good immune responses. They seem to be lasting for several weeks, but we haven't had that gold standard of, does the vaccine protect you from disease? And that's what these phase 3 trials are going to give us.
And that was Johns Hopkins School of Public Health professor Andrew Picos. A reminder, the school is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Now, Saudi Aramco, I should say, is pressing ahead with the planned $75 billion in dividends this year. That's despite a slide in profits and rising debt at the state-owned oil company as the kingdom battles a widening budget deficit. Joining us now with the details is our own Anne-Marie Hordern, who covers, of course, oil as well as luxury and many other things for us. Anne-Marie, we've seen oil majors halt their dividends. Why is Aramco different?
Well, Matt, I think you almost made that in the intro, saying Saudi Aramco, Saudi Arabia, one and the same. Aramco really needs to keep this dividend in order to continue the revenue for the state. Saudi Arabia is so reliant on the funds from Aramco, so they plan on paying out this $75 billion in dividends, even though they have a slide in profit and a surge in debt. The country, as I say, generates most revenue from crude, and its budget deficit this year is set to exceed 12%. So you can see how important that revenue is to the state. Outside of the dividend, other things to consider was their capital expenditure expenditure. They say that that's going to come on the lower end of the range of $25 to $30 billion they set in March. That's a far cry from what they thought in January would be their capital expenditure, to as high as $40 billion. So you can see there, they are really trying to cut ends wherever they can in order to make sure they keep the sacrosanct dividend. And then gearing as well shot up this quarter. And they really equate that to the purchase of SABIC. But one thing we may see, and Aramco had talked about this in June, was that they may have to issue loans or bonds in order to pay out the dividend. So one thing is for sure determined by this report. They are really maintaining firm that they will continue to pay this dividend that is so important to the Saudi state.
We also heard from the CEO on his outlook for the oil market. What's Saudi Aramco's outlook?
They're relatively optimistic, and a lot of this has to do with the fact that Asia is really their number one priority in terms of exports regionally, and they say that Asia is really close to pre-crisis levels, which we've been talking about for weeks. And Amin Nasser sees oil demand about 90 million barrels a day. So last year we had in 2019 100 million barrels a day, but that last 10 million barrels a day, that's going to be the ones to watch. How do you make that up, given the fact that still around the world we're seeing piecemeal lockdowns, as well as the fact that flying is nowhere near close to pre-crisis levels? But recouping that demand and the supply story we're seeing, a lot of that is thanks to Saudi Arabia and Russia, and of course the historic cuts they've made. But really the question is going to be, how do they get back to that 100 million barrel a day in demand? And that's something we're going to be watching.
All right, Anne-Marie, thanks very much. Anne-Marie Horder in there talking to us about this big, indeed one of the biggest in terms of company size stories in the world. Coming up, prominent democracy advocate Jimmy Lai is arrested in Hong Kong under its controversial security law. We're going to bring you all the details of that. Plus, don't remember that Carrie Lam has been sanctioned, and there's going to be a U.S.-Taiwan partnership after the highest-ranking official from the U.S. visited that country since 1979. This is Bloomberg. Welcome back to the European Open. We are 30 minutes into the trading day right now, and we're looking at the Stock 600. This is the broader European equity index right now, up about 0.6%. If you take a look at the group ranked returns, GRR Go on your Bloomberg terminal, you can see then the industry moves. Banks are doing the best today, followed closely by oil and gas as well as insurance. The only losers are technology. This is interesting because we saw, if you look at U.S. futures and you're prepping for the U.S. Open today, we did see a while ago that Dow and S&P futures were doing much better than NASDAQ futures. Indeed, that's still the case. NASDAQ futures are unchanged right now. Dow futures are up about 0.5%. So tech stocks, the worst performers here. We'll see how they do in America, where they're so much bigger and so much stronger. Let's get the Bloomberg First Word News right now. For that, we go back to London and Laura Wright. Laura?
Thanks, Matt. President Donald Trump announced 4 executive orders this weekend. They include a temporary payroll tax deferral and expanded unemployment benefits. But the move was criticized by opponents for providing little real help. They say it's an attempted power grab from Congress and a backhanded way to defund Social Security and Medicare. Billionaire Bill Gates says it's mind-blowing the U.S. has not improved coronavirus testing. He described the process as slow and lacking fair access. Speaking on CNN, he cited long lines at commercial labs. He says it means wealthy people have quick access, but others have to wait. Gates says no other country has such, quote, insanity. Hong Kong police have arrested media tycoon and democracy activist Jimmy Lai, raiding the offices of his flagship newspaper. It's the latest action under the new national security law passed in late June. It comes just days after the U.S. imposed sanctions against Hong Kong's leader Carrie Lam for curtailing freedoms in the city. After last week's deadly blast, world leaders are pledging almost $300 million to help rebuild Beirut. That's after a virtual conference co-hosted by French President Emmanuel Macron and the United Nations. It comes amid mass protests in Lebanon. Demonstrators are calling for the resignation of government over its role in the explosion. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Matt.
Laura, thanks very much. Laura right there in London with your First Word News. Now, Hong Kong police have arrested, as Laura just told you, media tycoon and democracy activist Jimmy Lai, raiding the offices of his flagship newspaper. It's the latest action under the new national security law that was passed in late June. Bloomberg senior international editor Jody Schneider joins us now to talk more about this. So, Jody, Jimmy Lai's arrest, is this so far the highest profile arrest we've seen? He's a very rich, older gentleman.
Yeah, it is very high profile, and the way in which it was done was very high profile. They arrested him at his home. Then they went to the flagship newspaper. Almost 200 officers entered the offices there with warrants and basically raided and searched the offices of the newspaper while it was being live streamed by the reporters there. This is under the new national security law, which people have been arrested on suspicion or breaches of the legislation, including secession and collusion with foreign countries, which is what it appears that Mr. Lai is going to be charged with. So it was very high profile. It spoke to a lot of fears that people have in the city that basic freedoms like freedom of the press that had been guaranteed before this will be eroded. And it was a fairly shocking display of power. This is a 72-year-old man, and they had hundreds of officers in that office.
Right. He owns media properties through his company, Next Digital Limited. The shares in that stock, Next Digital, dipped initially and now have absolutely soared. Look at this, up. I mean, it's a penny stock, clearly, but up 216%. What's the story there? Yeah, and at one point they rose as much as 344%. It was Hong Kong for
40 cents, but still in afternoon trading, very heavy volume. There had been that morning decline in which they were at their lowest level on record right after the arrest, reports of the arrest. But the surge came after pro-democracy supporters went on social media, urged people to buy the stock, to take a stand against us by buying the stock, and clearly that's happening. So it's this is a big moment in Hong Kong, and it is about this national security law as much as it's about Jimmy Lai and his properties.
We are getting headlines right now, Jody. The Chinese have no interest in interfering in the U.S. election. This, according to the China's foreign ministry, the spokesman. Here we've got live pictures of him. So saying that they don't have any interest in interfering in the U.S. election. Probably not thrilled, though, with the U.S. What China may see as interfering in its relationship with Taiwan. Alex Azar, who is the U.S. Secretary of Health and Human Services, going to Taiwan, talking about a joint venture with Taiwan, the U.S. and Taiwan on health. And this is the highest ranking official to visit Taiwan since 1979. Talk to us about that.
May well hear about that soon, I presume. But this is the highest-ranking U.S. official to go to Taiwan in more than 4 decades. He's a sitting cabinet member. He was there to talk about the virus and Taiwan's dealing with it. They've been very successful in containing the outbreak there. But also, he made some very direct criticisms of Beijing. He said Taiwan was so scarred by China's lack of transparency during the SARS outbreak in 2003 that its people didn't trust information coming from Beijing or the World Health Organization, so they went ahead and took things into their own hands. This has been that was really a direct criticism of Beijing, and just the very fact that he is there is very, very it's a very direct kind of criticism and direct provocation of China. They have made it very clear that they do not want to see the U.S. interfering in Taiwan, just as they didn't want to see the U.S. interfering in Hong Kong. And this comes amid all these other escalations, including last week, President Trump, this is just days after President Trump moved to ban WeChat and TikTok, which is owned by a Chinese company, ByteDance, which really sent shockwaves to the global tech community.
All right, Jody, thanks very much for joining us. Jody Schneider there talking to us about the U.S.-China relationship. Remember, in a week that the two are preparing to go back over their trade agreement so far. Coming up, large UK firms are 10 times more profitable when they have executive boards that are at least 1/3 women. But still, the industry is lagging far behind when it comes to gender equality at the top. We'll discuss next. This is Bloomberg. Welcome back to Bloomberg Markets. This is the European Open, 40 minutes into the session right now, and we're looking at gains, almost a 1% gain now, adding 56 points to the FTSE 100 in London. Let's go there right now and get the Bloomberg Business Flash News, today's top corporate stories from Laura Wright. Laura?
Thanks, Matt. Saudi Aramco is pressing ahead with plans to pay $75 billion in dividends this year. That's despite slumping profit and a surge in debt. Net income for the quarter fell 73% from a year earlier, but the worst may be over. The oil giant's chief executive, Amin Nasser, says it's already seeing a partial recovery in the energy market. Twitter and TikTok have held preliminary talks about a merger. That's according to Dow Jones. It's not clear if Twitter will pursue a deal, but Dow reports as the social network is much smaller than Microsoft, it probably would not face the same level of antitrust scrutiny. 1 in 3 UK employers plans to cut jobs this quarter. That's according to a survey by the CIPD and Adecco Group. It highlights the growing risk of a labour market crisis as government support is withdrawn. Last week, the Bank of England warned unemployment will rise to about 7.5% by the end of the year. That's your Bloomberg Business Flash. Matt.
All right, Laura, thanks very much. Laura right there in London. In London on the FTSE right now, there are more CEOs called Peter than there are women. That's still the case. Not only does it highlight a stark lack of equality among corporate Britain, but the disparity also contributes to a sizable loss of profits. Here to explain is Danny Berger. Danny?
Matt, that's right. This is definitely equally as much as an economic issue as it is a social one. According to The Pipeline, a consultancy firm, for UK firms whose executive boards are at least 1/3 women, they're 10 times more profitable than those with only men. That means in the FTSE 350, there's about £195 billion worth of profits that these companies could unlock if they simply added more women to the top of their ranks. Now, this is especially an issue now as the disparity continues to get worse. Last year, I should say, there were equal amounts of women as there were men named Peter in the FTSE 100, but that's still not good enough. And because of the coronavirus, we've seen this disproportionately impact women who are more frequently out of jobs and suffering more. The UK government also isn't quite focused on this at the moment because of the coronavirus. In fact, they've let companies no longer report their pay gap statistics during the pandemic. Now, I spoke with Lorna Fitzsimmons, who's the co-founder at The Pipeline and a former MP herself. I asked her about this lack of data and pay gap, and she said it was absolutely a mistake from the government to allow this. Now, take a listen.
We cannot let the meagre advances that we've made become vulnerable because of how we behaved during COVID. And lots of our clients are in the categories that have to collect and report their data in terms of the gender pay gap, and they've got the data sitting there. So the good companies are going to actually publish it, and the government needs to sort of listen and say, if they've collected the data, we should still be looking at that data.
Now, Theresa May also wrote the foreword for their latest report, and she echoed the same sentiment as Fitzsimmons, saying that we need to be focused on this even amid the coronavirus pandemic, Matt.
Yeah, former Prime Minister Theresa May, a strong voice there. Danny, thanks very much for that. I wonder if there are any sectors where we see a lack of gender equality more noticeable than others. And I'm sure there are.
Obviously this is across the board, but if you look at somewhere like retail, that's where women really should be calling the shots. They make up the majority of the customer base as well as the majority of the workforce. But in the FTSE 350, there's only one woman at the helm of a retail company. In continental Europe, only 3% of CEOs are women. And then also we have trouble areas like the finance industry. For those put forward in the UK for a senior role, only 1/5 of employees were women. And this is important because when you have women who are executives, they're more likely to prioritize equality throughout the entirety of the firm. That's according to The Pipeline. And now, especially if companies are struggling for profits during the coronavirus pandemic, this is a clear way to increase profitability at firms, Matt.
All right, Danny Berger talking to us about gender inequality. Thanks very much for that, and really the damage it does to the economy. Now, speaking of, locker room antics within the banking world are back in the spotlight again. That's as a trial suing Barclays has been underway in London. Sexist comments that Barclays' best paid employees made when referring to financier Amanda Stavely during the credit crunch have emerged as part of the trial. This includes remarks about her appearance and with whom she might be sleeping. A British dealmaker with ties to the Persian Gulf, Stavely was one of the few prominent women working in the financial industry at the time. She's suing Barclays for £1.6 billion for cheating her out of profits from deals that she brought in. For more on this, we're joined by Bloomberg legal reporter Ellen Milligan. So, Ellen, these phone transcripts, how are they found, and then why were they made public?
Yeah, so these phone transcripts were released as part of this trial between Amanda Stavely and Barclays. Before the trial began, her lawyers managed to obtain over 1,000 documents as part of their evidence. And through that, these 3 phone transcripts in particular containing sexist language between Barclays' best paid bankers were disclosed.
What do these comments say about the culture at Barclays? I mean, sure, they're 12 years old, but have attitudes changed?
Well, the banking industry is notoriously male-dominated, and it's not a secret that sexism does exist. But I don't think comments like these have been laid out in such a black and white way before. Some of the language used is incredibly explicit, some quite sexualized and very demeaning towards women. As part of our reporting, we spoke to a couple of lawyers who specialize in sex discrimination cases, and I think it's easy to say these comments happened 12 years ago, but these lawyers told us that even today, similar comments and locker room talk is disclosed often in WhatsApp and text messages between bankers. And I think it's interesting that one of them said there'll be a mad scramble to delete messages now that through this lawsuit, people have learned that 12 years later, their comments can come back to bite them.
Yeah, absolutely. And we have seen resignations from important important lobbyists as a result as well. Ellen, thanks so much for joining us. Ellen Milligan there, Bloomberg legal reporter, joining us out of London. Up next, inflation, stimulus, and the U.S.-China conflict. These are the themes that are likely to move the markets this week. They're the main top stories really today. We'll discuss with the head of our European MLive team next. This is Bloomberg. Welcome back to Bloomberg Markets. This is the European Open. We're looking at gains here on the FTSE, about 0.8%, or almost 50 points up to 6,080. The CAC 40 also gaining about 0.7%, or 34 points to 4,923. Now, in the U.S., President Trump has signed 4 executive orders related to coronavirus relief. You'll get expanded unemployment benefits, possibly a temporary payroll tax deferral, also possibly, depends on if your employer wants to pay along, eviction protection, and student loan relief. As for the stimulus negotiations in the House, Democrats and Republicans are still trillions of dollars apart on spending, the two parties disagreeing on issues including aid to state and local governments, as well as the amount of extra jobless benefits. Joining us now is Christine Aquino, who leads our MLive team in Europe. And Christine, you know, we recap this because it's been so important to markets. Do you think the gains that we're seeing now and in U.S. futures are because investors see this as a decent stopgap measure?
Yeah, absolutely, Matt. And I think it is the markets interpreting these measures as something that is good enough for now. And that's why we're seeing a little bit of a lift in markets today. Now, the question, of course, is how long this sort of goodwill in markets is going to last, because we still have this congressional standoff hanging over all of us, and investors are, of course, looking to that. They do recognize that it is a short-term measure, and so the longevity of this current rally to open the week will very much depend on the developments in Congress and whether that standoff can be broken and we can get a more sustainable solution in terms of stimulus.
The focus, the other big focus for markets is the U.S.-China relationship. It doesn't appear to be getting any better with the arrest of Jimmy Lai, the sanctioning of Carrie Lam, Alex Azar's trip to Taiwan. How do the markets feel about this right now, and what should we be looking at for sort of signposts?
Yeah, very tentatively in terms of the market reception here, Matt. I think it is one of these things that is keeping investors on edge, and probably a reason why we're probably not getting as much of the stimulus-driven lift as we could have, because we have this other big risk of U.S.-China tensions hanging over markets. And I think in terms of the key things to watch out for would certainly be any sort of retaliation from China, whether it's similar action on U.S. tech companies, especially because all this comes as well in the wake of executive orders moving against TikTok and WeChat in the U.S. just at the end of last week. And so it all makes for a very, very tense sort of situation, and all eyes on China now as to whether we get any sort of hit back, whether it's specific actions targeted at U.S. tech, for instance, or anything more general.
Let me put to you the MLive question of the day, because with regards to China, I think everyone's watching the economy very closely, and one signal that we get as to how well China is doing is the price of copper. So we saw it fall hard on Friday. Is the copper warning, or is the drop in copper warning of a broader turning point? Because at the same time, Christine, didn't imports also soar?
Yeah, it is going to be an interesting question. And I think, you know, copper as a macro indicator has been questioned in recent years. And, you know, we've all been wondering, is this still, it used to be a great macro indicator for Chinese raw materials demand, which is a great reflection, of course, of just the health of the global economy. But in recent years, it has broken down a little bit as a macro indicator, because it has had more to do with specific supply demand dynamics rather than a broad indicator of sentiment. And so we take this, though, in conjunction with what's happening elsewhere in markets, right? So we're seeing still a bit of an exuberance in the equity rally. Seems like we're looking for a reason to rally there, but then also a rally in gold, which is a bit at odds with the equity rally in a little bit. So, yeah, it's still early days as to whether this is a definitive indicator, but certainly taken in conjunction with everything else, it does seem like early signs of things running out of steam here a little bit.
Well, hopefully it's not irrational exuberance. Christine, thanks very much for joining us. Christine Aquino, who leads the MLive team in Europe. You can check out her work and the work of her team by typing MLIV Go on your Bloomberg terminal. That's it for the European Open. If you want to see Bloomberg surveillance, then stick it right here on Bloomberg television. If not, if you want to hear me on radio, I'm going there right now, so you can switch over and listen if you're in the city on London DAB Digital.
Executive action. President Trump signs 4 virus relief measures, including expanding unemployment benefits and deferring payroll taxes. Nancy Pelosi says his orders provide little real help. Hong Kong police arrest media tycoon and democracy activist Jimmy Lai. This comes after the U.S. sanctioned Carrie Lam for curtailing political freedoms. And Saudi Aramco presses ahead with dividend plans despite sliding profits and rising debt. Net income, well, that fell 73% on the year as crude prices collapsed. Welcome to Surveillance. I'm Yusuf Gameneddin in Dubai. Let's check in on the markets because we have a situation where the countdown to the review of the Phase 1 trade deal between the U.S. and China is, of course, getting factored in the wider picture. The Stoxx 600 Europe at the moment, we're up 0.3%. For now, traders looking, of course, to more stimulus measures out of the United States. The U.S. president's executive action appears to have bought enough time to get everybody back to the negotiating table. So at the moment, slightly risk on, and that's getting reflected as well in the Brent crude trade. We're up 1.1%, just below the $45 a barrel handle. Remember that we are snapping a 2-day losing streak. The indications from Saudi Aramco are bullish. They're seeing demand in Asia getting a little bit stronger as well. They're back to pre-virus levels. Euro-dollar 117.64. A little bit of downside there. We're looking at a weaker dollar, but broadly, a lot of these G10 pairs confined in narrow ranges. And then U.S. 10-year yields at 0.56%. Barclays says, you know what, go short on the 20-year treasuries. UBS says go short on the 5-year yields. Plenty to consider, plenty to get through. But now, let's also get the Bloomberg First Word News with Leanne Gerrans. Leanne.
Good morning, Youssef. Billionaire Bill Gates says it's mind-blowing the U.S. government hasn't improved coronavirus testing. He described the process as slow and lacking fair access. Speaking on CNN, he cited long lines at commercial labs. He says it means wealthy people have quick access, but others have to wait. Gates says no other country has such, quote, insanity. It's the most senior visit by a U.S. official for 4 decades. Health and Human Services Secretary Alex Azar is visiting Taiwan, a move likely to fuel tensions with China. Azar has hailed the island's democracy and praised the government's response to the pandemic. Beijing last week said it was firmly opposed to that trip. Hong Kong police have arrested media tycoon and democracy activist Jimmy Lai, raiding the offices of his flagship newspaper. It is the latest action under the new national security law passed late in June. It comes just days after the US imposed sanctions against Hong Kong's leader Carrie Lam for curtailing freedoms over in the city. And after last week's deadly blast, world leaders are pledging almost $300 million to help rebuild Beirut. That's after a virtual conference co-hosted by French President Emmanuel Macron and the United Nations. It comes amid mass protests in Lebanon. Demonstrators are calling for the resignation of the government over the role in the explosion. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Youssef.
Thank you very much, Leanne Gerrans. Let's get you some breaking lines hitting the Bloomberg amidst the guidance or the lack thereof this time round from Porsche. They're saying that they are not currently in a position to make a fiscal year forecast amid the uncertainty. They're expecting a positive group result after tax for fiscal year 20, and they're still seeing fiscal year net liquidity at 400 million euros to 900 million euros. So again, the key line here being that they're currently not in a position to make a fiscal year forecast amid the ongoing uncertainty in the wider automotive industry. But let's flesh out our top story in a bit more detail. The Treasury Secretary, Steven Mnuchin, says that he'll listen to any Democratic proposal for a new corona relief package. And the House Speaker, Nancy Pelosi, says she hopes talks with the White House resume soon. Over the weekend, President Trump took executive actions on relief to work around the congressional impasse. Democrats and some Republicans have called the president's actions unconstitutional. Well, get to some more perspective here with Seema Shah. She's the chief strategist at Principal Global Investors. Thanks for joining the program. I mean, some immediate reaction from the Fed's Charles Evans, and we put this up on a quote board, Seema. Let me read out a key portion of this. As you look at the economic outlook, there are some negative scenarios, and the ones that are most pessimistic involve not supporting state and local governments. States have to balance their budgets. They are experiencing reduced tax revenues, and so there will be employment reductions. How much time did the administration really buy itself here with this latest executive move?
Not enough. So I think that we've probably got a couple of weeks, maybe a month or so, before they really need to get an agreement done. And I think, Evan's comment is really key. I don't think we can exaggerate. We've had a bit of a bounce back in the economy, that goes without saying. But we have to remember that bounce back has been driven a lot by the policy stimulus. So if that policy stimulus isn't continued, then we could be looking at a real drop in consumer spending. And we know that consumer spending is the main driver of the US economy. So we could be looking at a bit of a second dip if this isn't sustained.
Just another line crossing the Bloomberg. It's a busy start to the show, but this has gone red actually on the Bloomberg, and it's around US-China relations. So as had been anticipated, China is going to sanction US officials in retaliation over Hong Kong. Just coming through, we had been getting some lines in the last few minutes around China's position when it comes to the visit of a top US officials to Taiwan. And now the key line being that they are going to reciprocate the latest move with sanctions on US officials. US equity futures at the moment still holding on to some upside there. But Seema, in terms of the U.S. stimulus, and I want to really drill down to this. What is your view on U.S. assets then in light of what you could argue is a Goldilocks moment, really, between recurring stimulus packages and a very accommodative Fed?
So I would say, look, we still like the US. I think there are other regions at the moment which look a little bit better. But I think the key thing here at the moment is, look, I think we generally have a consensus view that there will be a further stimulus package. They will come to some kind of agreement within the next couple of weeks. But I think what this has all shown is that, look, if the US does need further rounds of stimulus, as will many other countries around the world, there's going to be another debate. It's going to get harder and harder to pass new packages. So we really need to bring this crisis under control because the support mechanism is going to have to come to an end at some point. Now, when we look at the US, a lot of these concerns have brought us to lowering our exposure a little bit and really focusing on the key growth areas. So, for example, we still really like technology and we have focused a lot of our positioning in technology, whereas we've actually increased some exposure within emerging Asia and some in Europe as well.
Seema, I mean, in terms of the U.S. equity story, you've got a situation where the NASDAQ considerably outperformed some of the other indexes. And last week, it was a bit of an exception when it came to the Russell 2000, because for the first time, was actually the other way around. GTV Go for our clients, 6% weekly surge on the Russell 2000, and the NASDAQ pairing its weekly climb to 2.1%. Are you a believer that it is time to rotate out of tech, even if just a little bit, and into the cyclicals?
No, so what we think is we have maintained that exposure to technology. I don't think it's a time to reduce it, but this is also some perspective to actually start increasing allocation a little bit to some of the value space. You have to be very, very picky. You know, with bond yields so low, it's very difficult to see this being a rotation that could be maintained. But certainly the valuations, I would admit, are very, very clearly in favor of value. But within technology, we're still really in favor of the sector. You know, when we look at the cautious environment, we know that investors are going to be looking for strong balance sheets, positive cash flow, and also firms that have actually got a strong positive secular growth story. And we think that with the pandemic, with all that we've seen, it's just accelerated a lot of the movement that was already in play for the last decade. But it just means that technology really, to us, it's here to stay. So it's certainly one of the areas that we like. And I would say that also in emerging Asia, we like to play that technology story there as well.
Hold that thought, Seema. We still have a lot to get through. This is Seema Shah from Principal Global Investors. Again, just to get you a bit of a recap as the lines keep coming in. So the Chinese government making clear that they are going to sanction U.S. officials in retaliation. And now we are getting a little bit on meat on the bone. So they're going to be sanctioning U.S. Senators Rubio and Cruz. And we're seeing the offshore yuan dropping just a little bit on the Chinese sanctions plan. In fact, assets across the board beginning to recalibrate. And we will get into the broader reaction and the implications shortly. This is Bloomberg.
is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Yusuf Gameneddin in Dubai. Well, let's get back then to those breaking lines that came in the last few minutes, because China is sanctioning U.S. officials. The response is in, and it is firm. It includes the senators Marco Rubio and Ted Cruz, and it comes just hours after Hong Kong police arrested the media tycoon and democracy activist Jimmy Lai. Let's get more on the national security law fallout with Karen Lei. She's the Bloomberg China government editor. Karen, I mean, these latest lines, then, is just the beginning of a bigger China response?
Well, you know, this is a day that Hong Kong didn't think it would see even, I think, 6 months ago, between the Jimmy Lai arrest and now the sanctioning of officials. We just saw about 10 minutes ago, China sanctioned 11 U.S. figures. That's in response to the 11 officials sanctioned here over the weekend by the U.S., and they include a number of interesting people, including the president of Freedom House and the organization itself, and the director of Human Rights Watch. So China making a bit of a statement, especially with that number. And this is just going to fuel U.S. anger over Hong Kong, especially coming on the bat of that arrest this morning and the scenes that we saw this morning in Hong Kong with hundreds of officers storming the offices of the largest pro-democracy newspaper here, one of the most popular publications in Hong Kong, has really been a day that a lot of people have worried about ever since the enactment of the security law. A couple of months ago, people thought that it was going to be something that would be used to crack down on freedoms here, and this really shored up a lot of those concerns.
So what comes next then in this cascade of events as we look to the countdown around the discussions when it comes to the review of the Phase 1 trade deal?
You know, I mean, this just comes days after Trump made this huge move. He moved to ban WeChat and TikTok, and that not only shocked the global tech industry, but it really increased fears of a push for the decoupling of the American-Chinese economies. So people are going to be watching the Hong Kong sphere to see if things increase there, and also watching Health and Human Services Secretary Alex Azar's trip to Taiwan. He's there right now, and this is a trip that has really upset China. His comments there today are likely to stoke tensions with China as it increases diplomatic and military pressure on Taiwan. It just now again repeated its opposition to that visit. And some analysts are saying that Azar's visit has little to do with the coronavirus, as has been said, and is really primarily being aimed at sending a message to Beijing. So we could see more of that from the U.S. as well.
Well, we're going to leave it there. Karen, thank you for that. Karen Lei, Bloomberg's China government editor. Some more big moves in some of these markets. Stock specific around Twitter, it is gaining 6.4% in the pre-market on reports of those preliminary TikTok talks as interest around a potential takeover of TikTok increases. So at the moment, we're in excess of 7%. We'll see where that consolidates at over the next hour or two. But let's get back to Seema Shah, who, of course, joins us. She is from Principal Global Investors. Seema, I'm looking at some of the market reaction, and as much as some of the gains are, getting trimmed a little bit, it's not the kind of major response given the severity of these tensions and the escalating tit for tat and the escalating rhetoric. How much more thick skin do these markets have against this kind of back and forth?
Well, I think one of the things is that a lot of this was priced in. It was very much expected that in the run-up to the US election, there would be an increase in this rhetoric, as you said. The bark would get louder and louder as we get closer and closer to the election. So I think this is to be expected. I think what we have seen over the last few days is that maybe it has upped the ante a bit more than was expected. And certainly it is increasing the chances that we actually get fundamental action from the US even before the US election. So if that were to be the case, then we expect that, of course, the market reaction will be significantly more negative than what we're currently seeing. But I do think that this tit for tat, this to and fro, is likely to persist over the coming months, especially as we get November coming closer and closer.
Is the real red line, do you think, around the Phase 1 trade deal? I mean, we're counting down to the review of that agreement, and in many ways I feel like a kid waiting for his school report, sort of midsummer. What are you expecting on that front? Is it going to be just a reiteration of cooperation, or is that going to be perhaps another front where those tensions really become visible?
Well, what we have seen in the last couple of days is more and more people talking about potentially new tariffs coming in as they come to the end of those phase one, almost as you said, the worksheet, the exam sheet coming through. So I think that this is it's an increasing risk. But I would say that at this stage, we just think that this is going to be a status quo, and really markets and investors need to come to expect this. From our perspective, when we look at China over the coming years, you know, we have chopped off a little bit of growth off the China forecast for the foreseeable future, but that doesn't really disrupt the way that we would consider the investment opportunities. But it is, of course, something that we really need to take into context, and we need to look at which sectors are going to be affected the most. But as I said, we still like emerging Asia. It hasn't really changed the way that we're viewing the China opportunities.
I mean, I look at some of the China 5-year bond yields, and they were up by, what, 11 basis points last week. Arguably, that speaks to an economic recovery. But then I look at the CPI figures and core inflation at the weakest since 2010. I mean, that arguably has to be a red flag.
It is a concern. I mean, I think, you know, I don't think anyone would deny that there is a crisis, an economic crisis, not just in the US or Europe, but certainly in Asia as well. And China has not been able to avoid that. And of course, the US-China trade tensions certainly do not help the situation. But when we look at it from a relative value basis, actually China looks a lot more attractive than many other opportunities around the world. The growth story is pretty good. We think that the stimulus packages are all in play and working hard. And plus, they've come out of the corona crisis relatively unscathed compared to many other countries. But of course, these are all things that we need to keep a really close eye on. And as you said, those inflation figures will maybe cause some traders pause for concern.
Seema, our conversation continues. That's Seema Shah from Principal Global Investors. She stays with us. Let's give you a bit of a snapshot of what's around the corner. How badly was the UK economy hit by the coronavirus lockdown? We're going to look ahead to this week's key GDP data. This is Bloomberg. You're watching Bloomberg Surveillance. I'm Yusuf Gameluddin in Dubai. Well, let's get to the UK and talk about second quarter GDP, because that's likely to have plunged to levels that we haven't seen since 2003. That says the lockdown forced much of the economy to shut. The median forecast is for a 20% fall, which is a sharper slump than many European peers. The recovery is made harder by local spikes in cases, which are likely to hit confidence. That GDP number is coming through on Wednesday at 7 a.m. UK time. Still with us is Seema Shah from Principal Global Investors. Seema, sure, I get that we're going to see recession misery come to the fore as those numbers get announced. But what are you going to be looking for more specifically from which you can extrapolate something for your clients?
Yeah, I think, with the GDP figures, as they always are, it's very backward looking. So, we already know that the UK had a horrible hit in the second quarter. So actually, we've been focusing more on all of those high frequency indicators. I have to say that when we do our analysis and look across the globe at which countries, economies we like, the UK is pretty much bottom of the pack. There's a couple of reasons for that. Although on a valuation basis, it looks relatively cheaper than the rest, that's for a good reason. I think the fundamentals of the UK economy are somewhat worrying. And this is all despite having had, I think, one of the most impressive furlough schemes globally. So we have to remember that this all comes against a backdrop of significant government help. So this is a real worry for us. We do have concerns, of course, around Brexit. So when we look into 2021, we do continue to have worries there. And we also know that, the government, the Chancellor, is already thinking about how they're going to be pulling back that money, reducing the furlough scheme as soon as October. Is going to put a lot of businesses in a very, very difficult position.
Seema, more broadly in Europe, I mean, the summer is usually a time where a lot of sovereigns will take a break from issuing debt, but not as much Italy, because they're looking to capitalize on what have been very attractive yields. GTV Go for our clients. At this point, how do you include this in your asset allocation strategy when it comes to Europe?
Yeah, you're right. So, typically, as you said, August would be a bit of a slow month. But Italy, Spain, all these countries are really trying to take advantage of the good conditions, but also keeping an eye out there. Look, they may need additional fiscal spending over the coming months. They're not at the end of this crisis, same as anyone else. So you have to be sensible about it. So I don't think that we're looking at the trading conditions to be as slow as what we're used to. I would say that for when we look at Europe, we're quite impressed on three separate accounts. One is that the ECB to us is looking very, very credible. Certainly a lot more credible than it was back in March or April. I think it inspires a lot of confidence in people. The second thing is, of course, the fiscal mechanism. Taking that big step towards debt mutualization has improved the prospects for Europe on a longer-term basis. And the third thing is coronavirus cases, so that's under control. So to us, Europe is looking somewhat attractive.
Seema, we're going to have to leave it there. Thank you very much, Seema Shah, Chief Strategist at Principal Global Investors. Well, coming up, we're going to talk about Saudi Aramco. They announced their results, and they're going to push on with dividends. We're going to dig into that. This is Bloomberg.
day of risk-off across the financial markets, we bring you special coverage of all the price action and implications here on Bloomberg Television.
I was actually poor.
No foreplay?
Eat your bag of Lay's with a smile on your face.
If all the diseases have been taken, I'll take a tax.
Economics, finance, and politics. This is Bloomberg Surveillance. I'm Yusuf Gamiladeen in London. Well, I've moved to Dubai, that's for sure, so that's outdated. But in any case, let's get you some of the market action, because in the last 30 minutes we had some major breaking news from China. The government announcing that they are going to sanction 11 Americans in retaliation for similar measures imposed by the Trump administration. That's according to the foreign ministry spokesperson. So a lot of the gains have been given back, especially on the equity side. So the stock Europe 600 currently down 0.1%, euro dollar 117.66, but the moves are still fairly contained, so a sign of a level of resilience, at least for the moment. Let's get you some of the first word news as well and cross out to Leanne Garrett. Leanne.
Thank you, Yusuf. Breaking news this hour, China is sanctioning 11 U.S. officials, including Senators Ted Cruz and Marco Rubio. It's in retaliation for similar moves against Hong Kong, with the U.S. sanctioning 11 Chinese officials over the weekend, including the city's chief executive, Carrie Lam. Now, President Donald Trump announced 4 executive orders this weekend. They include a temporary payroll tax deferral and expanded unemployment benefits. But the move was criticized by opponents for providing little real help. They say it's an attempted power grab from Congress and a backhanded way to defund Social Security and indeed Medicare. Democrats and Republicans are still trillions of dollars apart on key spending issues, and there is not yet a firm date for another round of negotiations. House Speaker Nancy Pelosi is calling for a compromise on the overall package. Treasury Secretary Stephen Mnuchin prefers a piecemeal approach to a deal.
Anytime they have a new proposal, I'm willing to listen. But let me just say you're right. We agreed with the Democrats. We've said let's pass legislation on the things we agree on and knock these off one at a time. And they've refused to do that until they get their $1 trillion for the states.
After last week's deadly blast, world leaders are pledging almost $300 million to help rebuild Beirut. That's after a virtual conference co-hosted by French President Emmanuel Macron and the United Nations. It comes amid mass protests in Lebanon. Demonstrators are calling for the resignation of the government over its role in the explosion. And there's violence in Belarus after a contentious election result. Police in full riot gear dispersed thousands out on the streets to challenge the ballot. President Alexander Lukashenko claimed victory, but the opposition is now challenging that result. International observers have long criticized elections in the country for not being free and fair. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Yusuf.
Thank you very much, Leanne Garrett there. Let's talk about Saudi Aramco, because the company is pressing ahead with a planned $75 billion dividend this year. And that's despite a slide in profits and rising debt, as the kingdom battles a widening budget deficit. For more on this, we're now joined by Bloomberg's Anne-Marie Hordern. Anne-Marie, we've seen other oil majors halt their dividend. How sustainable are Aramco's ambitions to basically live up to the promises they made of yesteryear?
Good morning, Yusuf. Well, I think you can take away from this report that for Aramco, they are going to maintain the dividend really as much as possible, as long as they can, and looking to squeeze other parts of the business in order to maintain that dividend. They are holding firm on it. It's sacrosanct, we know, for all oil majors. And we saw Shell last quarter had a cut theirs, BP this quarter. But for Saudi Aramco, as you know better than anyone else being in the region, it is so crucial for the government, the revenue they get from crude and the revenue they get from Aramco, and the dividend is no different from that. And those revenues are going to be funneled through the state. And that is why it is so important for Saudi Aramco to maintain this dividend, especially when you look at this year, when its budget deficit for the state is set to exceed 12% of GDP. So they may end up having to issue more bonds, Yusuf, or loans to meet that commitment. They said that back in June, but it does seem that they are devoted to this dividend going forward.
You know, when a company like Saudi Aramco announces earnings, there are implications for supply chains around the world. I was looking at their CapEx guidance. It stood out to me, and they were pointing towards the lower end. What else stood out to you?
Well, the CapEx for sure as well stood out to me because it was the lower end of the range that they announced in March, and that's a far cry from the range they announced in January. So it's much lower than what they were going to start the year with. The year they thought they could get to as a capital expenditure as much as $40 billion. Now they're looking at $25 to $30 billion. The other thing that really stood out to me, of course, was the gearing. That is very important for oil companies. It's the debt, and that really spiked. And Aramco is equating this to the purchase of SABIC, but of course that is something to watch because oil companies really want to keep a low gearing. One thing is a bright spot for Aramco, Yusuf, and that's the fact that they started this crisis with relatively little debt compared to all the other oil majors. So that is one bright spot, and that gives them the ability to borrow, which is likely why they will remain firm on the most important thing for Aramco, which is that dividend.
It's always tricky to get any information on the road ahead from some of the senior oil executives in the kingdom. But this time around, the CEO giving us a bit of an indication as to where his thinking is at.
Yeah, they're a bit more optimistic on the demand side. They say they definitely see a pickup in Asia, and for Aramco, that's really critical. That's the #1 regional market for their exports, and they see the demand there close to pre-crisis levels. So Amin Nasser on this call on Sunday with journalists was talking about the fact that they see right now in 2020 demand being 90 million barrels a day. 2019 was 100 million barrels a day. Of course, the crucial question, Yusuf, is going to be when do we get that remainder 10 million barrels a day? We still have flights far from what we saw pre-crisis levels in terms of airline traffic. We still have piecemeal lockdowns around the world. That 10 million barrels a day to get to pre-crisis levels is probably going to be the hardest for the global oil world to really make up.
It's been remarkable as well. The Aramco share price has sort of hovered on 32, 33 Saudi riyals for a very, very long time. Interesting trade. Bloomberg's Anne-Marie Hordern, thank you for that. All right, here's what else is still to come. We're going to look at some of the UK firms, the largest of them, and they are 10 times more profitable when they have executive boards that are at least 1/3 women. But still, industry is lagging far behind when it comes to gender equality at the top. So we're going to discuss that. This is Bloomberg.
think the continued rise in payrolls, and bear in mind, Jonathan, you know, this was a hotspot payroll report.
This is a very good report, very promising. A strong recovery continues, but we also are acutely aware that we have ways to go.
The labor market continues to heal, but it is at a moderating pace. The last 2 months, job creation was stronger than it was this month.
And unless we get the virus under control, I would expect us to remain in this lower breadth of jobs gains.
It's going to get increasingly more difficult. About 42% of the jobs lost have been recovered thus far.
The big issue is the depressed level of spending and income in the economy, which is reflected in the level of the unemployment rate of around 10%.
The level that we're at, of slightly above 10%, is where we were in the peak of the global financial crisis.
The problem with this report is not going to resolve much in terms of what's going on.
Listen, monetary policy only works to a certain end, and then you just can't go anymore.
These leaders have to come together and understand it's about what's ahead, not what's behind.
Those were some of our guests reacting to Friday's job report in the United States. Well, let's get the Bloomberg Business Flash for you again and cross out to Leanne Garrett. It's Leanne.
Good morning, Yusuf. Berkshire Hathaway spent a record $5.1 billion buying back its stock in the second quarter. The investment firm saw a 10% drop in operating profit, but that wasn't as bad as expected. Alongside those buybacks, billionaire Warren Buffett kept growing his own cash pile, now at a new record of over $146 billion. Equinor has appointed Anders Opedal as its new CEO. Current boss Alder Satay is retiring after running the oil major for the last 6 years. Opedal is currently Executive Vice President of Technology Projects and Drilling. He joined Equinor as an engineer back in 1997. 1 in 3 UK employers plans to cut jobs this quarter. That's according to a survey by the CIPD and Adecco Group. It highlights a growing risk of a labour market crisis as government support is withdrawn. Last week, the Bank of England warned unemployment will rise to about 7.5% by the end of the year. And that's your Bloomberg Business Flash. Yusuf.
Thank you very much for that. Now, in the FTSE 100, there are more CEOs called Peter than there are women. And not only does it highlight a stark lack of equality among corporate Britain, but the disparity also contributes to a sizable loss of profits. Well, to flesh all of this out, Danny Berger joins us. Danny, give us a bit of a sense then of sort of what the numbers are pointing to.
Yeah, and the numbers here certainly, Yusuf, point to an economic issue as much as a social one. So the Pipeline, their consultancy firm here in the UK, found that when companies in the UK have an executive board that are at least 1/3 women, they're 10 times more profitable than those that are only men. That means in the FTSE 350, there's £195 billion worth of profit that these companies could unlock if they simply added more women onto their boards. Now, the situation has also been worsening. I should say last year there were equal numbers of women as there were men named Peter, still a not great statistic nonetheless. And the situation has been worsening because of the pandemic. Unemployment is especially high among women and minorities, and the government is allowing companies to lose focus more or less on this as they deal with the fallout. They're telling companies they are no longer required to report their pay gap statistics as they deal with the pandemic. Now, I talked to Lorna Fitzsimmons, who's the co-founder of the Pipeline and also former MP herself, and she said this was absolutely the wrong move from the UK government. Take a listen.
We cannot let the meagre advances that we've made become vulnerable because of how we behaved during COVID. And lots of our clients are in the categories that have to collect and report their data in terms of the gender pay gap, and they've got the data sitting there. So the good companies are going to actually publish it, and the government needs to sort of listen and say, if they've collected the data, we should still be looking at that data.
Especially during the pandemic, Yusuf, this is a clear way companies can increase their profits if they're struggling, but still we're not seeing it happen. Theresa May, I should say, also wrote the foreword to the study from the Pipeline, echoing what Lorna Fitzsimmons was saying there.
Danny, thank you very much for those insights. That's Danny Berger there. Well, locker room antics within the banking world are back in the spotlight. That's as a trial suing Barclays has been underway in London. Sexist comments that Barclays' best paid employees made were referring to the financier Amanda Stavely during the credit crunch have emerged as part of the trial. This includes remarks about her appearance and who she might be, quote, sleeping with. A British deal maker with ties to the Persian Gulf, Stavely was one of the few prominent women working in the financial industry at the time. She's suing Barclays for £1.6 billion for cheating her out of profits from deals she brought in. For more on this, we're now joined by Bloomberg's legal reporter, Ellen Milligan. Ellen, why were these phone transcripts made public to begin with?
Yeah, so these phone transcripts were released as part of this trial between Amanda Stavely and Barclays. Before the trial began, her lawyers managed to obtain over 1,000 documents as part of their evidence. And through that evidence, these three phone transcripts in particular, containing sexist language between four of Barclays' best paid bankers, were disclosed.
And what do the comments say about the culture at the bank and the industry at the time? I mean, they are nothing short of shocking revelations.
Yeah, so the banking industry is notoriously male-dominated, and it's no secret that sexism does exist. But I think what these transcripts did was present just how sexist the culture the banking industry can be in an incredibly stark way. Some of the language used is incredibly explicit, too explicit, in fact, to repeat on television, and it's very demeaning towards women.
And then in terms of attitudes towards women in the industry, has much changed in 12 years from the numbers and the research that you've done recently?
Sure. So I think it's very easy to say, you know, these comments were made 12 years ago and the industry was very different back then. But actually, through our reporting, we spoke to a couple of lawyers who specialize in sex discrimination cases. And even today, similar kinds of comments crop up in WhatsApp messages and text messages exchanged between colleagues when it gets to the disclosure stage in a lawsuit. So I think it was interesting that one of the lawyers told us that there would be a mad scramble to delete messages among bankers now that they realize that comments they make now may come back to bite them in 12 years' time.
Ellen, appreciate a lot of those key points. That's Ellen Milligan. She's Bloomberg's legal reporter based out of London. I want to get back to the market action. We have a situation where the decision by Chinese policymakers to sanction U.S. officials in retaliation, that is taking away the rug from under the feet of the initial upside that we saw in some of these equity markets. So European stocks erasing gains, stocks turning lower. So we're down about 0.1%, still fairly contained a reaction. Gold is hovering around $2,034 an ounce. We're also just a little bit lower there, 117.61. And ranges have been quite confined going into early trade. Remember, it is a holiday in Japan and Singapore, so some of that liquidity is not online. But we're down 0.1% in U.S. 10-year yields. For the most part, unchanged at 0.56%. Coming up, we're going to be talking about the, well, very heated debate as to the debt conversation. The Bridgewater's Pop Prince tells Bloomberg why the role of government debt has been upended by the pandemic. We'll bring you that interview next. This is Bloomberg.
Climate change is the defining issue of our time, so we've redefined how we cover it. With clear data and rigorous journalism, we rise to the scale of the challenge to reveal the breadth of possibility. We look at stories from every angle to provoke debate, spotlight solutions, and make sense of the greatest crisis of our generation. Bloomberg Green, solutions for a changing climate.
It is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, and politics. This is Bloomberg Surveillance. I'm Yusuf Gameneddin in Dubai. An eventful last 60 minutes then, with lines coming through that the Chinese government has decided to sanction 11 American officials in retaliation for similar measures imposed by the Trump administration. So stocks erasing gains. We're just barely below the flat line, though, at the moment on the Stocks Europe 600 technology shares, leading losses among European stocks. Energy producers are gaining a little bit because you've got crude on the up after the Saudi Aramco earnings announcement. Euro dollar to 117.65. We're down 0.5% broadly. A dollar move, really, and the U.S. 10-year yield still at 0.56%. Well, let's get back to the market action now and the conversation around debt, because Bridgewater Associates co-CIO Bob Prince says that while government and high-grade corporate debt have traditionally been a place to hold wealth, the extreme low interest rate world brought on by the COVID-19 pandemic has upended the role. Prince spoke with Bloomberg's Jonathan Farrell. Take a listen.
While everybody sort of focuses on the change in payroll and people tend to focus on the growth rate, the big issue is the depressed level of spending and income in the economy, which is reflected in the level of the unemployment rate of around 10%. And the longer that we're in that situation of a depressed level of income and spending, the more vulnerable individuals and companies are to that set of circumstances. And the most likely time frame for that virus impact on income and spending is 18 to 24 months or something like that. It's very uncertain. But if you can imagine, we've just had, kind of a 4-month fiscal program or 1 quarter. Imagine having to do that a second quarter, a third quarter, fourth, fifth, sixth, seventh, 8 quarters. Imagine having to do that for 8 quarters in a row to make up for the low level of income and spending in the economy. Imagine the potential on the dollar, the potential on inflation, the potential and the effects on other assets. So yeah, and then also as that lingers on, I think you have a combination of economic destruction with liquidity expansion.
The added vulnerability, Bob, and this is what we're here today to talk about, is zero rates. What zero rates now, and a world where they can't get away from zero for maybe the foreseeable future, means for the economy and how we need to rethink portfolios as well, Bob. Can you speak to that?
Yeah, well, it's really sort of a mind-blowing thing that essentially when you have a zero interest rate on the Treasury bond, that means there is no interest rate. If there is no interest rate, there's no discount rate on cash flows. So how long is the duration of cash flows, and what's the present value of cash flows that have no discount rate except for the risk premium? So there are a number, obviously, implications for bonds in the traditional 60-40 portfolio. From the bond perspective, you have virtually a zero return, and you have an asymmetric return because there's no limit to how much the bond yield can go up. Even if it goes to flat zero, you're only going to make maybe 5-7% over the next, 7 years or so, but you could lose 20 or 30% if you have some sort of a normalization of real yields or a rise in inflation. So you have that asymmetry in the bond market, and you're not getting paid any return. But I think what people are not registering is how that impacts the equity market. There are 3 big impacts of zero interest rates on the equity market. First of all, you've taken away the floor on an equity decline, because typically if you get an equity decline and an economic decline, earnings are falling, but if bond yields fall, it lowers the discount rate on those earnings and supports prices. If you can't lower the discount rate on those earnings, the downside is bigger. The second thing is if you can't cut interest rates, then you can't put a floor under the economy except through monetization and fiscal policy that we're doing, which then threatens the currency. And the third impact that it has on a portfolio is that if the equities are falling, normally you'd get the bond rally to diversify that risk away, but that doesn't exist now. So you're sort of holding the equity side of it with not much downside protection, and you're holding the bond side of it with an asymmetric return pattern and a zero yield. So it's a very problematic scenario for any sort of traditional investment strategy.
As the Bridgewater Associates co-CIO Bob Prince there speaking to Bloomberg's Jonathan Farrow. Here's a bit of a, preview of what's coming up, because Bloomberg Surveillance continues in the next hour with Tom Keene in New York and Guy Johnson in the UK. Later, don't miss that conversation on commodities with the Barrick Gold CEO, Mark Bristow. In the meantime, markets coming in a little bit more cautious in the last 60 minutes after the announcement from the Chinese government in terms of sanctions on 11 American officials. And then the other big talking point is going to be around the American stimulus measures, the U.S. president taking executive action. Is that going to be enough? Is it going to last long enough for the market to sustain its current leg up? This is Bloomberg.
Another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
This morning, perhaps it is by executive order on Hong Kong, China will sanction Senators Rubio and Cruz. On Taiwan, Taipei calls Beijing a, quote, global troublemaker as a U.S. cabinet officer makes the first visit in over 40 years. Beijing says a candid dialogue, it is necessary. There are 4 Trumpian executive orders. Some suggest they are, quote, incomplete or legally questionable. Dr. Navarro says they were created by the Lord and founding fathers. And perhaps executive orders will help in Istanbul. The lira, it depreciates against any and all. Good morning, everyone. Bloomberg Surveillance. I'm Tom Keene in New York. Guy Johnson in for Francine Lacroix in London as well. Guy, we are into the summer months in August. I look at the newspapers in the United Kingdom, and it's sort of a soup of distractions right now. Give me an update on the virus in the United Kingdom, because the statistics I look at are actually pretty good.
They are pretty good, Tom, and there are large parts of the country where people are talking about the fact that we may have achieved herd immunity. Certainly, you listen to the commentary coming out of the large hospitals. They are seeing a fraction of the number of cases that they saw coming through the door back in the spring. Certainly, the situation seems to be under control, and this is prompting Boris Johnson, the Prime Minister, to make firm assertions, Tom, that schools will return come September, right, in the same way that Governor Cuomo is making those assertions in New York.
Yeah, he's pretty lonely on that right now. That'll be one of our themes without question here in August. Back to school supplies, they are in order, but will there be back to school? On a Monday with our first word news in New York City is Ritika Gupta.
Morning, Tom. Guy. In Hong Kong, it's the highest profile case yet against democracy activists under that new national security law. Police have arrested media tycoon Jimmy Lai and raided the offices of his flagship newspaper. Lai's accused of colluding with a foreign country to endanger national security. Meanwhile, China is retaliating for the U.S. decision to sanction 11 Chinese officials over the crackdown in Hong Kong. Beijing says it will sanction 11 Americans. Another move by the U.S. is likely to stoke tensions with China. It's the most senior visit by a U.S. official to Taiwan in more than 4 decades. Health and Human Services Secretary Alex Azar praised Taiwanese President Tsai Ing-wen's response to the pandemic. Azar called Taiwan's democracy an inspiration to the region and the world. Some U.S. governors are pushing back against President Trump's executive action on added unemployment benefits. The president signed an order to offer $400 per week in supplemental pay. The catch, states have to kick in 25%. New York Governor Andrew Cuomo says the president's order is based on shaky ground legally. Plus, he says it's impossible for states to pay. And billionaire philanthropist Bill Gates says it's, quote, mind-blowing the U.S. hasn't improved its coronavirus testing. The Microsoft co-founder told CNN the process is slow and lacks fair access. Gates says you can't get the government to improve the testing because it just wants to say how great it is. Gates and his wife have donated $350 million towards coronavirus research. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Tom Guy.
Ritika, thanks so much. Equities, bonds, currencies, commodities. Let's get to it right now. Interesting market. It's a churn market, and this is always what you see on a Monday after the jobs report. There's no surprise there, but there are some nuances out there as well. What I'd really look for is a yield structure moved higher off what was perceived is a pretty good jobs report, and we'll need to reset that Monday and Tuesday as well. The yield to 4 digits. We do 4 digits at Bloomberg Surveillance, 0.5624, and the 10-year yield. And I would note, Turkish lira, let's recall, on Friday, Mr. Erdogan spoke, and lira strengthened nicely off that. And what you need to know is it's given up with a vengeance. All of the improvement off the Erdogan comments of Friday, and really now it's 7.40 earlier, really threatens further weakness as well. Guy, what do you see this morning?
European equities fading after those Chinese sanctions on US officials were announced a little bit earlier on, Tom. We are now back to flat. We are trading on very light volume, as you've already pointed out. It is August. Volume very light last week. That's continued into this week. We are seeing some leadership coming from the energy sector, Tom. OPEC out this week with its key report. We've got 2 other key reports we need to digest as well. Could be a busy week for the energy sector. Euro dollar continuing to fade. The dollar catches a bid. It started on the 6th. It's continued into this morning, 117.71. Copper had a really bad Friday, Tom.
Yes.
It's bounced back a little bit. Pay attention to that one. It's a useful indicator.
Guy, thank you so much for bringing that up. I saw this, folks, and in the blur of the weekend, I missed it and all that. Guy, I mean, it is Dr. Copper, and there's been a very nice improvement here off the grimness of March and April. And what an ugly 2 days for copper.
Absolutely. And I think the commodities story could be broadly in focus this week. As I say, Tom, OPEC out with its key report. You've got 2 other key reports to digest. Copper is just one of those really useful leading indicators. It does stand in some ways antagonistically to what we're reading in the rest of the market, but nevertheless, a lead indicator potentially to pay attention to.
Even better, Guy, we can rip up the script here and go to our guest to get us started on this Monday. Valentin Marinoff with us with Credit Agricole, looking at the larger currencies. We'll touch on Turkey and all that, but that's off his watch right now is G10 FX Research and Strategy at Credit Agricole. Valentin, I'm going to rip up the script on copper and go to Australia dollar, which is essentially a commodity proxy with that trade with China. What has Australia dollar done recently?
Well, the Australian dollar has been following other currencies higher against the dollar. And I have to say that we were surprised by the resilience of that particular currency, especially given the return of COVID in Victoria, state of Victoria, and indeed what it bodes for the overall economic outlook for the Australian economy. That said, it does seem that where the domestic economy may continue to struggle as the lockdown measures had to be reintroduced, the global environment with commodity prices, metals in particular, still quite supportive. And it should be also mentioned that the resilience there, this persists despite the fact that not only there was a trade conflict or indeed a conflict, geopolitical conflict between the US and China, but China and Australia actually engaged into a trade confrontation. So despite that, as I was saying, the resilience of the Australian dollar seems to persist. I therefore think that if some of those supports start to fade, if indeed investors reassess the more near-term economic outlook in Australia, but also if some of the industrial metals start losing their shine, Aussie could be one of the first victims.
Right, Valentin, the reason I wanted to get you on this morning to start us off strong was to reset on our dollar thinking. It's incredibly range-bound. Kitchuk's over at SocGen talks about a narrow market as well. At Credit Agricole, can you form a dollar call that has movement to it, or is it just stasis on the dollar?
Well, at the moment, at least, it does seem that some dollar negatives really are already in the price. And I guess investors are awaiting more news or indeed further developments really to make up their mind. Our own view is that whereas we cannot exclude further range trading in the very near term, the outlook for the dollar should not improve anytime soon. In particular, we worry that the pandemic, the COVID-19 pandemic, will only start showing the negative economic impact of the pandemic will only start showing in the economic data in coming months. And this could actually force the Fed to be again more proactive, potentially as soon as September. And topping it all, we do think that political risks associated with the U.S. presidential elections are not fully in the price. We therefore think that the dollar trajectory from here could be potentially still lower, especially against the majors, the likes of the euro and the Japanese yen.
Valentin, good morning. It's Guy. Let's talk a little bit about what is happening with the stimulus package or lack of stimulus package. The president had to deliver executive orders to keep the show on the road. That is going to take us very close to the election you just said was underpriced. We're therefore likely to see debate and disagreement as we approach November on the stimulus that will be required for the US economy, an economy that you say as well hasn't fully felt the effect of COVID-19. How toxic a combination will that be for the dollar going into November?
Well, that's an excellent point. And indeed, so that was one of the more recent developments, which is continuing to cloud the outlook for the dollar. The lack of agreement in Washington in full view of the potentially very negative economic impact of the returning COVID-19 pandemic could be quite damaging for the dollar. It highlights really what a dysfunctional Washington or DC may look like potentially after the November election. In particular, even if, say, President Trump is to be reelected, but the Democrats regain control over the Congress, right? Or indeed, equally, if we have a new president in the White House, but the Republicans maintain control of the Senate. So that lack of really cooperation in the face of the economic calamity actually is quite troubling. So, and historically at least, the dollar tended to underperform quite significantly at times when we had really similar split where the Dems were controlling the legislature, whereas the president was a Republican, or vice versa. So that could be a potentially pretty damaging development. And I have to say, as I mentioned, really for the markets to really respond, and indeed for the investors really to make up their mind, if you wish, on the dollar, the U.S. economic data should also start showing the strain, the impact, the negative impact from the returning pandemic, which so far at least is not the case.
Valentin, thank you so much, particularly those early comments on Australia as well. Mr. Marinov is with Credit Agricole. We're going to launch through a Monday here. Yeah, it's a Monday in August, and maybe there's a little bit of sluggishness to us, but there's lots going on, particularly in politics and international relations. Martin Schenker to start off our 6 o'clock hour, and then Michael Darda will join from MKM Partners. Mike Darda will look at the synthesis here of economics into a stock market you don't own enough of. This is Bloomberg. Good morning.
We are above forecasts. 1,800,000 jobs is the total non-farm payrolls, with 17,000 additional jobs added in terms of net revisions.
You still got 1.8 million with a big decline, almost a full percentage point drop in the unemployment rate, which will move to single digits easily in the summer and fall.
Leading up to this data, there was a lot of reason to suggest that the pace of increase had slowed. And in fact, what we see in this data is, of course, it has slowed. But the good news is that it is continuing. And it is continuing despite some slowdowns that we're seeing around the country as a result of an increase in cases.
People tend to focus on the growth rate. The big issue is the depressed level of spending and income in the economy, which is reflected in the level of the unemployment rate of around 10%.
Some things you see coming, some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
Surveillance. Guy Johnson in London. I'm Tom Keene in New York. Thank you for being with us this morning. Futures up 7, Dow futures up 120. We just heard from Valentin Marinov sort of framing up there the market action, the litmus paper of the system. And then there are the economic systems of this world. At BlackRock Investment Institute, Elga Barsh is wonderful. It's synthesizing together a more holistic view. Thus begins a 3-hour conversation. I'm kidding. We were lucky. We've got her here for a number of minutes this morning. Elga, there is so much to talk about in this summer, in this August of a really strange 2020. How does Europe come out of this? When we come out of this pandemic, when we come out of the generational change of leadership signaled by Chancellor Merkel, where will Europe be on the other side of this bridge?
Yeah, I think, good morning, Tom. I think the Europe at the moment looks like in somewhat better shape than other parts of the world. It has a better control of the virus dynamics. The policy response also seems to come together more than in other places, and there's more visibility about the fiscal stimulus that's been available. That looks fine. And then...
Okay, ladies and gentlemen, good morning. I am placing an order for euro. I want to buy euro at it's short for euro 117.731. So I'm placing an order to sell short euro at 117.731. Okay.
Structural unemployment rate and bringing back into work a lot of people who were previously priced out of the market. And that, together with the rise of part-time employment, caused a sort of visible slowdown in labor productivity. Now, going forward, Europe still suffers from the fact that it has a lower long-term growth potential than other parts of the world, various emerging markets, but also relative to the U.S. So it still needs to do more work on some of these structural issues.
Elga, the United States and China are heading for Cold War 2.0. It looks increasingly like that day after day. Europe is going to have to pick sides, yet Europe has a much bigger exposure to China than the United States does from an economic dependency point of view. When Europe has to pick sides, how big a hit is there going to be to the European economy?
Yeah, personally, I'm not 100% sure that Europe will proactively pick a side. I think it might try to chart its own course, but that will be challenging. But I think that from a political point of view, Europe standing on its own 2 feet, politically, economically, I think might be the best way to balance out this difficult position, which we think is here to stay. The decoupling, the deglobalization, and it has profound implications for how you actually need to structure your investment.
No, nevertheless, there is, even if Europe tries to go its own way, as you say, the economic landscape is going to change. Globalization appears to be in reverse and is likely to only continue down that road. What does that mean for Germany? What does that mean for Sweden? The kinds of countries that feed in high-tech engineering into the Chinese economy, are they still going to be able to do that? Even if it's a 5% drop, a 10% drop, what does that mean?
Okay, new short position open for euro at 117.731.
And it's more deeply intertwined with global value chains as well, so it will be affected. But equally, you could argue that as a lot of companies are reviewing their supply chains, they will also, as they are changing how they produce, where they produce, they will actually, at least initially, have higher demand for capital goods because they are rejigging their supply chains. So I don't think it's necessarily, preset that capital goods producers such as Germany or Sweden would immediately suffer from this.
Elga, we're going to leave it there. Thank you very much indeed. We really appreciate your time, as ever, giving us a sense of what is going on from a macro perspective. Elga Bosch, BlackRock Investment Institute, Head of Macro Research. What have we got coming up for you on Bloomberg Markets with Alex Steele and myself a little bit later on? We're going to be talking to Mark Bristow. He's the Barrick Gold President and CEO. What a time to have a conversation with Mark as gold continues to push on. 10:30 a.m. in New York, 3:30 p.m. in London. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They move the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
True diversification. That's what adding commodities exposure to your stock and bond portfolio can help provide. The Bloomberg Commodity Index is the standard for commodity market exposure. 23 traded commodities are represented: agriculture, livestock, metals, and energy. The Bloomberg Commodity Index is the benchmark most widely used by investment professionals globally. Track your commodity investments with a proven financial information partner. The Bloomberg Commodity Index. True diversification.
We've put ourselves on the front foot again by adapting all the company, by resizing, by adjusting production rates, by adapting the supply chain as well to this new difficult environment.
market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Let's get the Bloomberg Business Flash. Saudi Arabia's state-run oil giant plans to pay $75 billion in dividends despite a profit slump. Aramco posted a 73% drop in earnings for the second quarter. The company expects its performance and demand for energy will improve over the rest of the year. Most of Aramco's payout will go to the Saudi government, which owns 98% of its stock. Warren Buffett is gambling on better days for his Berkshire Hathaway. Berkshire spent a record $5.1 billion buying back its own stock in the second quarter, and the conglomerate may have kept that higher pace going in July. Berkshire posted a 10% drop in operating profit. That was a smaller decline than some analysts had forecast. And industrial equipment maker Roper Technologies reportedly is in talks to Vertafore. According to Reuters, the price is close to $5.5 billion. Roper is said to be competing with private equity firms for the deal. Vertafore is a software company focused on the property and casualty insurance industry. It's owned by Vista Equity Partners and Bain Capital. And that's your Bloomberg Business Flash. Tom, Guy?
Rebecca, thank you very much indeed. European stocks now beginning to make positive moves. We are on very light volume, though. The London market, for instance, Tom, negative 46.45% of its average daily volume over the last 100 days. It is August.
It is August. There's no question about it. What we're watching, we're lift to the market. NASDAQ not, NASDAQ flat, but SPX up 7 on futures. Turkish lira 7.33, keeping us informed. This is Bloomberg. Good morning.
Hi, I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
Guy Johnson in London, Tom Keane, of course, over in New York. Tom, let's talk about what is happening in China. Bloomberg learning that China will now sanction top U.S. officials. This, of course, in retaliation over Hong Kong as tensions between the two nations ramp up further. The U.S. on Friday, remember, sanctioned 11 Chinese officials, included in those 11 the chief executive, Carrie Lam, and China's top enforcers of the financial hub. This done over their role in imposing the security law. Joining us now is Ginny Yan, ICBC Standard Bank Chief China Economist. Ginny, I'm trying to work out whether at the moment this is symbolic or it's going to have...
I'm placing a stop on profit for euro at 117.721. Sorry, 711. Stop on profit for euro 117.711. It will give us £200 in profit.
Of China's economic growth will still continue to boost, I guess, the recovery momentum in China.
Do you think the financial markets, though, are taking this kind of quite well? I look at what's happening with dollar CNY. I see it with a 6.9 handle. In some ways, given the magnitude of some of the commentary that I'm reading, talking about a Cold War 2.0, I'm surprised that the currency continues to do what it does. But I guess maybe the data that you're talking about could be partly the reason behind that.
Yes, the strong data is certainly one factor. The other factor, of course, is that we've seen all of this before. We've been seeing it for a year now, really, and that kind of tit-for-tat retaliation, as you've been talking about, we've been warned of it. So markets are becoming a little bit used to it now. So pricing in all of that noise in the coming months. And we know that up until the elections, we will see that ratcheting up of tensions between the two sides.
Jenny, good morning. It's just wonderful to have you on. What is your estimate? I go back, folks, to Jenny being with Standard Charter and now with ICBC, which is an important bank of China. Will we see a lessening of export and import dynamics between the U.S. and China? I mean, we have all the political action, but will it actually be a diminution in trade?
Very interesting. The latest trade data we saw on Friday actually showed that the Chinese imports of manufactured goods from the US is starting to recover. That said, what we know as part of the phase one deal is that we need a lot more agricultural and energy goods to really make up that shortage and that gap. And it's going to be a very big challenge to really make up that shortfall because of obviously the pandemic situation having an impact on global trade. So going forward, there will be recoveries, but will it be enough to satisfy the amounts necessary to satisfy that phase one trade deal? And that is a big challenge.
Jenny, a delicate question, and with your domicile in London, I'm going to ask it. I don't think I would if you were in Beijing, but do you triangulate Beijing, Hong Kong, and Taipei when you discuss economics and when you discuss the international relations of all that's going on in this August of 2020? How do you position those three geographies?
It's a very interesting question, and from an economics and market perspective, what you must remember is that a lot of Hong Kong-based and Taiwan-based investors are also invested in China's domestic markets. Obviously, with the opening up of China's bond markets, equity markets, well, you must also remember that a lot of Taiwan-based investors and Hong Kong-based investors are really looking more to trade US, particularly with US treasuries yielding so low, those Chinese domestic bonds, sovereign bonds, are becoming more attractive. Yes, there are probably, from a political angle, there are triangulation, but from a financial markets perspective, it is the fundamental support and, of course, the yield that is most important to investors.
Ginny, would there be any economic impact if the United States banned WeChat and TikTok?
To be honest, I think that might be coming. If the current trend is going to continue, that might be something that will be of concern in the past. But I believe the key here is that whether this kind of rise in tech giants in China can be slowed or can be replaced. At the moment, those giants might be able to be sanctioned, etc. However, what we also must remember is that unicorns in China are really starting to overtake the number of unicorns in the US and the rest of the world, and that is very, very difficult to slow down. So it is the rise of China as a tech power as well as an economic power, and the domestic consumption picture is very strong, meaning that what most US and global organizations are looking to is to capture that domestic Chinese consumer market. So China is not only a producer, it is also a very important consumer of most tech goods globally as well.
Ginny, sorry, I'm jumping around here a little bit, but I just want to get your take on something else that I've been hearing over the last few days. People have been scratching their head trying to understand why the pound has been as strong as it has been. And I heard one theory that suggests that Hong Kong money is flooding into London at the moment to seek a safe haven. Do you think we are likely to see some of that happening? Do you think there is a kind of a haven status that is being attached to the UK right now, and some of those flows are backing that up?
Well, being based here in London also as a UK national, I have to say that any open economy, and London obviously being one of the key financial centres globally, will welcome a lot of capital inflow. Similar now to other global cities, New York and Shanghai to some extent now, Hong Kong, of course, Singapore. So any of those international cities with some sort of reputation, with transparency, with institutions in place, will start to see inflows of capital, and that will continue. And I see that the strength of a pound probably not supported by fundamentals, particularly as we're not seeing those recoveries yet over here. The labour market is still very weak, etc. But what it is supported by is that historical institution that capital will continue to flow into those global cities and financial centres.
Ginny Ann, thank you so much for being with us. With ICBC Standard Bank of China. Right now, with our first heard news in New York City, is Ritika Gupta.
Thanks, Tom. The struggling U.S. economy will get only limited help from President Trump's latest executive orders, but that may persuade lawmakers to get back to the negotiating table.
I'm moving further my stop on profit for euro to 117,681. Okay.
State, Wisconsin and Pennsylvania. The president won both of them in 2016 by a wide margin. Voters said things in America are going badly, and the president's handling of the coronavirus was a major issue. Another coronavirus milestone for the U.S. The country has now passed 5 million infections. It's added 1 million new cases in a little more than 2 weeks. Meanwhile, the positive test rate in Texas hit another record, but cases and deaths slowed in both Florida and Arizona. The father and son team accused of helping for Nissan chairman Carlos Ghosn escape from Tokyo are still in jail. They were both denied bail for a third time while they're fighting an extradition request from Japan. A federal judge in Massachusetts ruled that Michael Taylor and his son Peter cannot be released whilst another judge determines whether they are eligible for extradition. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Tom Guy.
Brilliant, thank you very much indeed. Coming up in the next hour, Franklin Rains, former Fannie Mae CEO. That conversation, 6:30 a.m. in New York, 11:30 a.m. in London. This is Bloomberg.
When everything around us, including the way we work and live, has been interrupted, uninterrupted service is peace of mind. Juzi from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
The Boston Symphony Orchestra presents BSO at Home, a collection of concerts, at-home lessons, and behind-the-scenes stories to enjoy while you stay at home. Learn more at bso.org/at-home.
Good morning, everyone. Bloomberg Surveillance. Thank you for being with us on a Monday as we get started. As Guy mentioned brilliantly, the volume really low in London. I mean, Guy, everybody, even with the virus, everybody clears out in London in August, right?
Everybody clears out in Europe, Tom. It's 100 degrees outside, certainly today and tomorrow, but it gets a little cool. Thundery later on in the week, but at least we've got power over here. But yes, generally, August, very light volume. Last week was light volume. This week is light volume. I'm fascinated to see what the story is in terms of return to work come September. How many of those trading desks will be staffed in London once the holidays are over?
And backed by the school debate as well. Very impressed, folks. Guy Johnson converting to Fahrenheit, something Francine Lacroix is usually unable to do. Right now, we will go to Hong Kong. We could spend the entire show, frankly, on Hong Kong, folks. Karen Lee with us, our China government editor as well. Karen, I want to go to one of the tea leaves that are out there, and it's always true in America, which is the symbolism of the flag. The South China Morning Post has a nice smaller article today where Beijing is really beginning to shape up the laws on desecration of the flag. To me, that is a little tea leaf of the tension in Hong Kong over how that flag from 1949 is displayed or shown or trashed upon in protest. What is the tension that you see in the symbolism of something like how the Beijing flag is treated in Hong Kong?
Well, you know, Tom, I mean, as you've been following, as we've all been following over the last 6 weeks or so, it's been, you know, just an escalating drumbeat of tensions between the U.S. and China over Hong Kong. And the vibe here is very different than it was 2 months ago. Yeah. And we saw scenes today of a top media tycoon being arrested, of 200 or so police officers storming the offices of the top pro-democracy newspaper here, which he owns. These are scenes that we wouldn't have imagined in Hong Kong even a year ago, right before the protests. And, I think for a lot of people, this was a confirmation today of some of the fears that have been circulating since that national security law came down at the end of June, that it was something China would use to curtail freedoms here, basic freedoms like being able to wave the flag you want, freedoms of the press, being able to protest, and all of that feeds into this narrative here of these concerns about Hong Kong's future autonomy from the mainland and what this all means going forward.
What does it all mean going forward, Karen? As you say, we just see Mr. Lee being arrested earlier. The shares in his company, Next Digital, down really sharply. Can we now assume that the kind of two systems, one country is gone? If you're the UK and you're trying to see what's happening here, do we effectively now have no independent media left in Hong Kong?
It's really, really troubling for media, and a lot of people here today are more afraid than they ever have been in the past in Hong Kong. These scenes, again, just really unthinkable. The foreign correspondents here, the club here slamming everything that's gone on today. For the U.S. especially, this question of autonomy from the mainland and two countries, one country, two systems. The Trump administration has really led the way in terms of criticizing what's gone on here over the last couple of months, condemning China over the security law, and also cracked down on media and pro-democracy activists in Hong Kong. And all of this is coming days after Trump, of course, moved to ban WeChat and TikTok, and that was a move that not only shocked the global tech industry, but it increased fears of a push for the decoupling of the American and Chinese economies, which would obviously be one of the biggest things we've seen in a long time. So I think that for a lot of people, this drumbeat of tensions, just things kind of seeming to go faster and faster. And in the last couple of hours, we've seen China move to sanction 11 Americans, including Senators Cruz and Rubio, in basically retaliatory sanctions for what the U.S. levied on Hong Kong officials on Friday. And people are saying, what are we going to see next? It's so hard to keep up.
Karen, what does sanctions actually mean? Folks, I just actually looked at this across the internet, and I think these are not economic sanctions. What is a diplomatic sanction in this regard to these 11 Americans?
Yeah, well, they didn't specify, and to a lot of people, I think this would be largely symbolic as a gesture, as they have been in the past. They also said that they would sanction other American entities in December over Xinjiang. So I think that for a lot of people, this is a really symbolic move as opposed to something that's going to have a major effect. But where it could be really important is in what it spurs the U.S. to do and how it keeps this drumbeat of tensions rising.
Karen, thank you so much. Too short a visit today. Karen Lee with her leadership as government editor in Hong Kong as well. We haven't looked at the virus, haven't talked much about it here, the case dynamics and the certain death dynamics, the statistics and trends. I did a shout out on Twitter this weekend. What New York State and New York City have accomplished is absolutely extraordinary when you look at the math. We'll get an update from Joshua Sharfstein of Johns Hopkins University. We do that in the next hour. Right now, Turkish lira churning here at a 7.33 within its depreciation. This is Bloomberg.
really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance. I'm Ritika Gupta. Let's get your Bloomberg Business Flash. Job cuts in the US, oil patch picked up last month, and the outlook may get worse. More than 9,300 people in the oilfield services sector lost their jobs in July. That's a 43% increase from June. There have been almost 100,000 job cuts in the industry since the coronavirus pandemic began. A trade group forecasts more cutbacks because the virus is stifling economic activity. And mall operator Simon Property Group reportedly has an idea on what to do with empty space once occupied by anchor tenants such as Sears and JCPenney. According to Dow Jones, those stores could be turned into Amazon fulfillment centers. Amazon also is said to be in talks about putting its coming grocery store chain in Penny locations. Mukesh Ambani has moved up the Bloomberg Billionaires Index. The chairman of India's Reliance Industries is now the 4th richest person in the world. He just surged past Europe's wealthiest person, LVMH CEO Bernard Arnault. Ambani has increased his fortune by $22 billion this year to more than $80 billion. Shares of Reliance have more than doubled since March. And that's a Bloomberg Business Flash. Tom Guy.
Rebecca, thank you very much indeed. How do you manage risk when interest rates are effectively zero? Well, let's focus on that now. Bridgewater Associates co-CIO Bob Prince says that while government and high-grade corporate debt have traditionally been a place to hold wealth, the extreme low interest rate world brought on by the COVID-19 pandemic has upended their role. He spoke to Bloomberg's John Farrow.
While everybody sort of focuses on the change in payroll and people tend to focus on the growth rate, the big issue is the depressed level of spending and income in the economy, which is reflected in the level of the unemployment rate of around 10%. And the longer that we're in that situation of a depressed level of income and spending, the more vulnerable individuals and companies are to that set of circumstances. And the most likely time frame for that virus impact on income and spending is 18 to 24 months or something like that. It's very uncertain. But if you can imagine, we've just had, kind of a 4-month fiscal program or 1 quarter. Imagine having to do that a second quarter, a third quarter, 4th, 5th, 6th, 7th, 8 quarters. Imagine having to do that for 8 quarters in a row to make up for the low level of income and spending in the economy. Imagine the potential on the dollar, the potential on inflation, the potential and the effects on other assets. So yeah, and then also as that lingers on, I think you have a combination of economic destruction with liquidity expansion.
The added vulnerability, Bob, and this is what we're here today to talk about, is zero rates. What zero rates now and a world where they can't get away from zero for maybe the foreseeable future means for the economy and how we need to rethink portfolios as well, Bob. Can you speak to that?
Yeah, well, it's really sort of a mind-blowing thing that essentially when you have a zero interest rate in the Treasury bond, that means there is no interest rate. If there is no interest rate, there's no discount rate on cash flows. So how long is the duration of cash flows and what's the present value of cash flows that have no discount rate except for the risk premium? So there are a number, obviously, implications for bonds in the traditional 60-40 portfolio. From the bond perspective, you have virtually a zero return, and you have an asymmetric return because there's no limit to how much the bond yield can go up. Even if it goes to flat zero, you're only going to make maybe 5-7% over the next, 7 years or so, but you could lose 20 or 30% if you have some sort of a normalization of real yields or a rise in inflation. So you have that asymmetry in the bond market, and you're not getting paid any return. But I think what people are not registering is how that impacts the equity market. There are 3 big impacts of zero interest rates on the equity market. First of all, you've taken away the floor on an equity decline, because typically if you get an equity decline and an economic decline, earnings are falling, but if bond yields fall, it lowers the discount rate on those earnings and supports prices. If you can't lower the discount rate on those earnings, the downside is bigger. The second thing is if you can't cut interest rates, then you can't put a floor under the economy, except through monetization and fiscal policy that we're doing, which then threatens the currency. And the third impact that it has on a portfolio is that if the equities are falling, normally you'd get the bond rally to diversify that risk away, but that doesn't exist now. So you're sort of holding the equity side of it with not much downside protection, and you're holding the bond side of it with an asymmetric return pattern and a zero yield. So it's a very problematic scenario for any sort of traditional investment strategy.
John Farrell, continuing the discussion with Bob Prince there of Bridgewater. Mr. Prince, really interesting at Davos on the dynamics that we see at the zero bound, and certainly we have continued towards the zero bound since January. January seems so long ago. Guy Johnson mentioning the volume or dearth of volume that we see in London. Futures up 6, Dow futures up 108, NASDAQ futures are flat, I'm going to call it this morning. A decided churn to the market with a little bit of fractional dollar strength. Brent crude out just under $45 a barrel. In our next hour, must listen, must watch. Michael Darda, MKM Partners. This is Bloomberg. Good morning.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
This morning, perhaps it is by executive order on Hong Kong, China will sanction Senators Rubio and Cruz and 9 others as well. On Taiwan, Taipei calls Beijing a, quote, global troublemaker as a U.S. cabinet officer makes a first visit in 40 years. Beijing says a candid dialogue is necessary. There are 4 Trumpian executive orders, count them. Some suggest they are, quote, incomplete or legally questionable. Dr. Navarro says they were created by the Lord and founding fathers. And perhaps executive orders will help in Istanbul. The lira depreciates against any and all. Good morning, everyone. Bloomberg surveillance. Guy Johnson in for Francine Lacroix in London. I'm Tom Keene in New York. It is a most interesting, odd August. And the heat guy in London, is it like normal summer heat? Or is it like the global warming, a record global warming in the Arctic? Is it like descending down upon, say, the United Kingdom?
It's descending. It's coming up. It's ascending from North Africa, Tom. That is what we've got right now. Okay. It's a North African heat bloom that is currently underway. I think it's going to fade by the middle of the week when we're expecting some fairly substantial thunderstorms. Maybe we'll be a little like New York without power towards the back end of the week.
I'm glad you bring this up, folks. It is extraordinary. Off the tropical storm of last week, many within the greater suburbs of New York City still without power. I can honestly say I've never seen that before. It is a most interesting August. We're going to get you started in this hour. Michael Darda will join us. Martin Schenker with us momentarily. Right now, our first word news in New York City. Here's Ritika Gupta.
Morning, Tom. Guy. In Hong Kong, it's the highest profile case yet against democracy activists under that new national security law. Police have arrested media tycoon Jimmy Lai and raided the offices of his flagship newspaper. Lai is accused of colluding with a foreign country to endanger national security. Meanwhile, China is retaliating for the U.S. decision to sanction 11 Chinese officials over the crackdown in Hong Kong. Beijing says it will sanction 11 Americans, but none are members of the Trump administration. Another move by the U.S. is likely to stoke tensions with China. It's the most senior visit by a U.S. official to Taiwan in more than 4 decades. Health and Human Services Secretary Alec Azar praised Taiwanese President Tsai Ing-wen's response to the pandemic. Azar called Taiwan's democracy an inspiration to the region and the world. Some U.S. governors are pushing back against President Trump's executive action on added unemployment benefits. The president signed an order to offer $400 per week in supplemental pay. The catch? States have to kick in at 25%. New York Governor Andrew Cuomo says the president's order is based on shaky ground legally. Plus, he says it's impossible for states to pay. And billionaire philanthropist Bill Gates says it's, quote, mind-blowing the U.S. hasn't improved its coronavirus testing. The Microsoft co-founder told CNN the process is slow and lacks fair access. Gates says you can't get the government to improve the testing because it just wants to say how great it is. Gates and his wife have donated $350 million towards coronavirus research. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Tom Guy.
Very good. Ritika, thanks so much. Equities, bonds, currencies, commodities. Let's make short work of it. There's not much to talk about. A churn to the market right now. Green on the screen. NASDAQ a little bit negative, actually. The NASDAQ futures. Yields churning as well. I'm going to leave it there. Turkish lira, we've been watching some lira strength in the last hour. Guy?
Here in Europe, Tom, as we've been pointing out all morning, very light volume, but nevertheless, equity markets beginning to gain a little bit of traction. We're up by 0.2%. Earlier on, we were stronger. It looked like it was going to be a very positive Monday morning. Then we saw the sanctions that we'll discuss in a moment coming in from China. That took the stock story down here in Europe. Energy, though, still leading. We're up 1%. We've got an OPEC report this week, plus a whole load of other information coming out about the energy sector. Keep an eye on that. It's likely to be a bumpy ride. 117.63. We actually have dollar strength this morning. And copper continuing to bounce back after a very bumpy Friday, Tom.
Very good. It is just the oddest time for the United States of America. Martin Schenker is our Chief Content Officer, and of course, we had tours of duty in Washington over the years and joined us for a briefing this morning. Marty, off of the surrealness of the last 4, 5, and 6 days on so many different fronts, what do you expect in an August Monday Washington today?
I suspect you're going to start seeing some maneuvering on both the Republican and Democratic side to figure out a way to get back to the table on some sort of stimulus package, because I think the pressure is going to be on Congress to get something done.
As simple as this, Marty, within the blur that I saw, and maybe you saw something I didn't see, I was most struck by the senator from Nebraska, Mr. Sass, who really went after his president on the unconstitutionality of these executive orders. Okay, that's like Democratic talk. Did it surprise you to see Republicans going after their president?
Oh, well, Ben Sass has on occasion taken issue with some of the excesses that he describes. President Trump thinks he can execute these kinds of things. But it's an interesting political move from President Trump because he puts actually the Democrats on the defensive by taking these actions. Either they can challenge them in court and probably will, but that puts them in a position to being against the things he's trying to do to help the economy. So it's an interesting dynamic.
Marty, good morning. It's Guy. I'm trying to understand the timeline that is going to be operating here. The president has bought the U.S. economy a little bit of time, but it's only a relatively short period that we're talking about. Do you think that we are likely to have to wait until the end of the current financial situation before we get a deal done, or do you think it'll happen towards the beginning? i.e., financial market's going to have to build in another cliff edge as we approach November?
You know, it's really interesting. I can see U.S. stock futures are actually higher this morning, and I suspect it's because they think it is going to force the hand of Congress to get together and come up with a deal. But I do think you're right. It's going to take the financial markets to actually send the message that they have to get a deal done. And as long as markets keep showing green, the pressure's off. So it's a fascinating conundrum.
Do you think the pressure increases on the Democrats to do something or decreases on the Democrats to do something? From a tactical point of view, the polls are narrowing, Marty, and I'm wondering how that changes the dynamics as well.
I actually do think that, and there's some speculation out there that Nancy Pelosi has overplayed her hand. She thought that standing her ground and hoping that the Republicans come to her side of the stimulus package would actually help get a deal done. But, as long as Donald Trump's taking these executive orders, takes some of the pressure off the Republicans. They have actually done something. So I do think that the pressure is going to be on the Democrats to come together before these measures lose any of their effectiveness come early September.
Marty, I'm trying to get to the end of the week. I mean, I'm seeing the hardship in New York, to be blunt, and the hardship around this nation. I mean, I understand guys over in London, it's a whole different dynamic and a much better Europe. But, Marty, I don't understand the timeline that gets us out to September. I'm trying to get to August 15th. Are these politicians?
Yes, Tom. And, you shouldn't be surprised by any of this. I mean, this is the way Congress has been working for the last probably 10 years. It takes getting to the cliff before you can get anything done. And unfortunately, we're going to have to see some more financial pain before you're going to get action out of this Congress.
Marty, thank you so much. Greatly, greatly appreciate it. Martin Schenker, early in his morning, our Chief Content Officer. On Bloomberg Markets today, Mr. Bristow of Barrick Gold, their President and CEO, a conversation in the 10 o'clock hour. Futures up 5. Stay with us, Guy Johnson and Tom Keene. This is Bloomberg. Good morning.
we are above forecasts. 1,800,000 jobs is the total non-farm payrolls, with a 17,000 additional jobs added in terms of net revision.
You still got 1.8 million with a big decline, almost a full percentage point drop in the unemployment rate, which will move to single digits easily in the summer and fall.
Leading up to this data, there was a lot of reason to suggest that the pace of increase had slowed. And in fact, what we see in this data is, of course, it has slowed. But the good news is that it is continuing. And it is continuing despite some slowdowns that we're seeing around the country as a result of an increase in cases.
People tend to focus on the growth rate. The big issue is the depressed level of spending and income in the economy, which is reflected in the level of the unemployment rate of around 10%.
Europe does, as you say, have some catching up to do on that front. So we are expecting to see a little bit of strength coming through at the start of trade. How long will it last, though? The perennial question.
This is a step in the right direction. Perhaps it's a harbinger for more changes in the future, like the completion of the banking union.
Bloomberg Surveillance. Good morning, everyone. Guy Johnson in for Francine Lacroix in London. I'm Tom Keene in New York with a set of spirited conversations this morning. We've been looking at Hong Kong, of course, looking at policy in Washington. And right now we synthesize this economy over to your thirst to be in the equity markets. Michael Dart has been doing that for years at MKM Partners, our chief economist and market strategist, and joins us this morning. Michael, I want to cut to the chase right now. You have a belief in risk-on assets. You have a belief in participating in the markets. So many are cautious. What do they get wrong?
Thanks for having me on, Tom. Well, I think what's happening here is they're looking at levels instead of rates and change. So if you look at the unemployment rate, it's still a crippling high, 10+%. And so this is still a very depressed economy, but we're bouncing hard off of a low base. And that's really been the story of the last few months. And in fact, over the last 3 months, we've regained just over 40% of the jobs lost during that terrible March and April period. And so this is an economy that's recovering. Earnings and earnings estimates are recovering from a low base, and the equity market has been anticipating it. So that's the story.
You mentioned in your note, Michael Dart, of a classic ISLM dynamic in March. I'll go with you. It was pretty much textbook. How do you extricate yourself from the textbook crisis? Is the next round of stimulus a requirement for you to get your optimism in the equity markets?
Well, I think at this point, policymakers simply have to follow through, and there's a big question mark over fiscal policy. Now we have the administration with the executive orders, a debate on, what the legality is there. But I think markets are pretty hopeful that there'll be some kind of legislative agreement on continuing with the fiscal support that was in place. And if that does not happen, then that could be a threat to markets, which have essentially priced in the continuation of support, both from a monetary and fiscal angle.
Let's talk about that support, Michael. I was listening to Bob Prince of Bridgewater a little bit earlier on, and I thought he made a fascinating point that if interest rates are at zero, trying to kind of understand what happens in the downside scenario becomes very interesting. The Fed puts, the Powell put, is seen as protecting equity markets. If we were to see a downdraft in the economy and the equity markets were to follow, do you think the Fed could support and prevent that drop becoming substantial? Or with interest rates at zero, the fact that you can't kind of reduce the discount rate means that that is impossible?
Yeah, it's a great question, Guy. I mean, I would say through interest rate targeting, what the Fed can do is obviously quite limited here. So they are constrained by the zero lower bound, and we're not that far away from that, even on the longer end of the Treasury curve. But they still have their balance sheet. They have forward guidance. The Fed is engaged right now in a policy review about potentially changing its target. So, I think more or less what the Fed could do here would be through signaling and asset purchases. It could use stronger guidance for what it's willing to do, even as the economy continues to recover. But I think the focus, in recent days has been on whether the fiscal support is going to be abruptly pulled because of legislative disagreements in Washington. So hopefully we'll get some clarity on that this week.
I agree, but the market's priced in a lot of good news, both in terms of on the fiscal front and on the monetary front. The monetary side, the market is expecting support from the Fed. The fiscal side, the market is expecting that Washington ultimately will deliver. What's the risk reward of owning equities right now?
Well, I think markets can probably continue to grind higher from here as long as we don't have a big negative surprise, but that is certainly the risk. It looks obvious in hindsight now, but a few months ago there was much more upside. And so, based on the conversations that we're having with, professional money managers, I would say that even with markets at these lofty levels, there still seems to be a lot of skepticism and pessimism out there. Many professional investors believe that everyone's bullish simply because the market's gone up a lot, but I don't really see that anecdotally in the conversations I'm having. It's not really in the retail investor polls for which we have data. And so that backdrop, absent a big policy shock, probably means you continue to grind higher.
Michael Darda with us. We're going to come back, folks. This is a real treat. We're going to talk to Michael Darda about the yield, the inflation expectations, and what's called the residual, which is the real yield. This was an interesting debate on the show all through last week. John Riding was just brilliant on this. I want Michael Darda to weigh in on this as well. In the next hour, we're thrilled to bring you Daniel Alpert. He is backing terrific and original research on the underemployment and unemployment of this nation. This is why I do this, folks. Michael Darda and Dan Alpert back to back. I mean, Guy, I'm going to tear up. It's just amazing. Futures up 5. This is Bloomberg. Good morning.
gustaría decirle a los empleadores que fueran más humanitarios con sus trabajadores, que les hagan valer sus derechos. Y estábamos viviendo en dos casas, en unas 50 personas y en la otra otras 50. En cada casa había 5 habitaciones. En cada habitación había de 3 a 4 camas abarrotadas. Vivíamos de 6 a 7 personas. Un baño para cada habitación y una cocina para todas. Una vez que nos atendieron en el hospital, al salir
nos avisó una compañera que ya nos habían reportado a migración.
Gracias a Dios ahorita de salud yo estoy muy bien, pero en lo moral no estoy muy bien, porque a causa de esta enfermedad yo perdí todo, perdí mi trabajo.
Yo creo que mi caso resulta un gran problema de cómo las personas migrantes estamos en riesgo de explotación por parte de los empleadores.
Some things you see coming, some things you don't. The trick is to be ready for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
Good morning, everyone. Bloomberg Surveillance. It's August. It's sleepy. Guy Johnson, Tom Keene. Let's get theoretical. That was a great song. You know, I remember that was a big hit 30 years ago. Michael Darter with us, MKM Partners. Michael, let's line up the ducks right now. Michael, this was the first project I did for Matt Winkler when I came to Bloomberg. You've got the yield, and you take away the inflation expectations, and you end up with a residual called the real yield. What within those dynamics do you focus on?
Well, Tom, I watch both of them. And so what we learned from this crisis is that, you know, the underlying source was